market is in a secular bull market.
You just haven't been talking enough about how resilient corporate earnings have been through all of the volatility.
Some of my models say we could go to 5,800.
We do think the big rally's done.
We think that the big equity market moves that we saw and the big fixed income moves that we saw were driven by recession fears.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Coming into Tuesday on an 8-day winning streak on the S&P 500, the longest daily winning streak of the year so far. Like from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Sneak peek at the price action. Equity futures positive once again. You make it day 9. It's the longest daily winning streak going all the way back to 2004. Lead quote for the team here at Bloomberg News in the last 24 hours comes from Goldman Sachs' Scott Rubner. The pain trade for equities, Lisa, is higher, and the bar for being bearish at the beach into a Labor Day barbecue party is high.
Not only because people want to have fun at their Labor Day barbecue, but also because this is the right kind of melt-up. It is not just stemming from big tech. This isn't just stemming from a small select group of names. If you look at the equal-weighted S&P 500, it notched a new record high yesterday, even though the market cap ended up about 1% away from the all-time high. So this is the right kind of rally that people want to sink their teeth into.
And it's validated by the fundamentals, the better data we've seen over the last week or so. And you hear this echo around Wall Street from bank-to-bank, economist to economist. This came from Morgan Stanley's Sarah Wolf. Sure, we're slowing, but the fundamentals do not point to a slump. Bank of America's Mike Gapen, slow and steady, not fast and furious. This came from Max Kentner just moments ago, Lisa. The cyclical data continued to defy recessionary fears.
Part of the issue is it's not just simply what we saw with jobless claims coming in below expectations in the prior reading last week. It's not just retail sales coming in strong. It's also the fact that when you look at the earnings, you're actually seeing earnings growth beyond the Mag 7. You're starting to see expansion of profit margins in a way that we haven't seen in several quarters. We're seeing sales gains that we haven't seen for a couple of years. These are kinds of green shoots that people want to see into a rally that go beyond just some sort of hopium that we saw earlier in the year.
Just turns the volume down on the drama going into that speech in Jackson Hole, Wyoming with Chairman Powell a little bit later on this week. Before we get to that speech, we've got some thoughts from the former President Donald Trump, someone we have called Federal Reserve Chair Donald Trump in the past a few times. He caught up with the team here at Bloomberg. Mark Niquette sitting down with him and asking him a few questions about the Federal Reserve, revealing his position, I think, on where things stand. There's been plenty of speculation, some comments to us directly here at Bloomberg a number of months ago. Also some comments we've seen to the Wall Street Journal, a report, you remember that one back in April, that maybe an incoming Trump administration would look to blunt the power of the Federal Reserve and have some influence over it. Let me share a couple of quotes with you. A president certainly can be talking about interest rates because I think I have very good instincts. That's the former President Donald Trump. Goes on to say, Anne-Marie, that doesn't mean I'm calling the shots, but it does mean that I should have a right to be able to talk about it like anybody else.
And he also said he did talk about it in the past, and he was able to jawbone the Fed. It's been murky and a bit foggy on where Trump stands at the Fed because of that Wall Street Journal report in April. But we caught up with Scott Bessent, the former CIO of Soros Global Fund, who talked about the fact that he would challenge the Wall Street Journal to release that 10-page report that allegedly exists within the Trump camp on the executive branch having more of an influence on the Federal Reserve. This is a little bit different, though, than what we heard from the former president earlier in the month, who said he thinks that he has better instincts and a gut, so he thinks that he should have a say. Now he's just kind of saying, I think it's fine for a president to just voice their opinion, which we have seen from presidents, Democrat or Republican.
The hard thing with this election cycle in general, one of the hard things, is that it's true. It's very hard to know what to take on its face or what is just basically a flavor, sort of a vibe to put out there. And I think this really underscores that, because there is a pretty big difference between trying to pull the strings and call the shots and say, I should be the Fed chair, versus I can weigh in. I'm a human. I happen to be also president, so I've got an opinion too. Those are two different things. But the fact that they can be conflated shows on both sides how we don't understand policy versus just simply rhetoric.
We'll assess both the vibes and the policy, we hope, at some point through the hour right here on Bloomberg. Equity futures right now on the S&P 500. If you are just joining us, we are just about positive on the S&P. Yields are coming in just a touch on a 10-year, 386.92. Had a ton of dollar weakness over the last few weeks. Euro dollar back to about 110.77. That currency pair largely stable this morning and pulling back just a little bit on crude. We're down 0.6%, 73.96 on WTI. Here's the lineup for this hour. We'll catch up with Joe Quinlan of Merrill and Bank of America Private Bank on why he does not see a US recession. Ed Mills of Raymond James on why you should expect more scrutiny of M&A under Harris, and Drew Redding of Bloomberg Intelligence as Trump calls Harris's housing plans a big mistake. We begin with our top story. 8 days of gains on the S&P 500 ahead of Fed Chair Jay Powell's remarks at Jackson Hole on Friday. Joe Quinlan of Merrill and Bank of America Private Bank writing the following: there's no US recession in our forecast because rumors of the demise of the US consumer are greatly exaggerated. Investors are missing the fact that not all consumers are created equal. Joe joins us now for more. So Joe, let's go straight there. Let's get straight into it. What are people missing?
They're missing the fact, John, that the higher income households here in the United States, the top 10% account for 20% of overall consumer spending. And they're doing fine. They have jobs. They have the wealth effect from the bull market in equities and housing. They're spending. And they may be coming down a little bit here. And there might be a little price resistant about an airline ticket that costs $10,000, so to speak. But they're out there spending. Lower income households for sure are feeling the pinch. But overall, the consumer is hanging in there. That's why the economy is going to continue to expand.
Based on the price action, Joe, it sounds like a lot of people are starting to agree with you. We've got an equal weight on the S&P, equal weighted S&P, record high. Nvidia, big tech still doing well. 6 days of gains, a rally of more than 24% over 6 sessions. Joe, the market's starting to get it. 6 weeks ago when we last spoke, you said clients were still comfortable in cash. Are they still comfortable in cash, or are you starting to see them deploy it over the last few weeks?
We saw the animal spirits kick in a couple of weeks ago, John, with the downturn. But I will say a lot of our clients still like to hold money market funds because of the election, because of the uncertainty. But they are warming up to equities, coming into the fixed income market. So some of that mountain of money is starting to move elsewhere. But we're not there yet because you talked about earlier on, the election setup is very uncertain here going into post-Labor Day. So that's the one big variable holding back that mountain of cash coming back into the equity markets.
Joe, is it just simply that they're concerned about a particular policy, or they don't have any clarity whatsoever? So after early November, you're going to end up with a flood of cash that goes into all assets, regardless of who wins.
Well, it's a good question, Lisa. I mean, honestly, a lot of households can't decide who they want. And, whether it's the Democrats or Republicans, so they're sitting on their hands waiting. So it is that uncertainty. It's just about the character, the personality, the policies. The country's divided. And so our clients are just saying, we can wait and see. They are in equities. They are in other parts of the market. So if they got a little cash on the sideline, they're happy holding it, getting 5% plus. But I think, Lisa, you're right. We get clarity from the election. And you talked about it earlier. What you say on the campaign trail versus what you do in the White House, two different things. So I do think there's a big surge of capital coming post the election.
Joe, I love that you point out that people are still in equities, and yet money markets are really attracting a lot of the funds. Is the election jitters really focused on longer-term bonds, on the deficit, versus, say, an equity call?
That's a key issue. That's another, that's when you talk about politics with our clients, the debt and the deficit comes up. Who's going to spend more? Who's going to drive more debt? How do we service it? So that's keeping our clients very concerned about the longer term. But at the end of the day, they're still going to buy U.S. equities. I mean, Lisa, a lot of our clients, they're differentiating between politics, Washington, and then the real economy, the private sector, technology, energy, industrials. They see real long-term opportunities in the private sector, despite the circus of Washington. So they're kind of differentiating and putting their money where their mouth is by investing.
Joe, when you get asked these questions, who's going to spend more? Who is going to be worse for the deficit? What's your answer to your clients?
I have no answer. I mean, either or, right? Right. I mean, we have a country still have to work through our financial, problems. But if you look at historically speaking, you can make the argument tariffs would not be good for the U.S. economy. It could be inflationary. You could argue that more housing subsidies, so forth. You can make either case, but we make the case that either or, Democrats or Republicans, the U.S. has some work to do when it gets getting its financial house in order. But how do you do that, Anne-Marie? You grow the economy. Uncle Sam has a private sector behind him that's growing GDP, growing the denominator, and that's what matters.
Okay, well, let's talk about the private sector behind Uncle Sam. We have reporting that Kamala Harris is going to maintain a Joe Biden proposal of raising the corporate tax rate to where it is right now. Where do you see the corporate tax rate going when there's going to be a massive debate on Capitol Hill next year?
I mean, Anne-Marie, think of it this way. In the first half of this decade, we've spent more money fiscally than we have in decades. So I think the second half of this decade, there's going to be a reckoning, whether it's Democrats or Republicans. This country has a reckoning coming when it comes to the finances. And I do think we have to think about, retirement, Social Security, raising taxes, individuals, corporations. We have to have that debate. There's no doubt about that, because we cannot, our fiscal path, everyone knows, is unsustainable. So how do you fix that? You can inflate it, you can grow, you've got to raise revenue. So I think investors are coming around to that. They're not looking for anything radical, but I think the country's ready to have a debate about raising fiscal revenues in the second half of this decade after how much we spent in the first half. So I think we're ready. But to your point, to what extent, how large, who pays, who doesn't, that's, the debate in front of us still.
Hey, Joe, it's great to catch up, sir, as always. Joe Quinlan there of Merrill and Bank of America Private Bank. Thank you. We need to get to some earnings. It is tough in home improvement. Lisa, we saw that with Home Depot. You see it in Lowe's this morning.
Yeah, what you have is full year comp sales down 3.5% to 4% versus the expected down 2 to 3%. Interestingly, the shares are not necessarily really moving that much on this. They're cutting full year guidance, talking about the same dynamics that we saw from home improvement, as you mentioned. We'll get through some of the other issues. It did talk about how there is this sort of macroeconomic environment that's causing some pressure. But again, this raises the question, how much is this ultimately a housing issue, and how much is this a broader, weaker consumer? Because what we're hearing from the likes of Walmart is different than the Home Depots and the Lowe's of the world.
I wasn't choking up and getting teary over Lowe's numbers just moments ago.
Sure.
My voice was slowly breaking.
I know how you feel about Lowe's.
It's emotional. It's
I know.
very emotional.
You and your home improvement projects.
Housing is a big issue right now on the campaign trail as well. There are some talk of tax incentives for home builders. There is some talk of tax incentives for home buyers as well. We've heard that from Kamala Harris's side. Starting to get a glimpse of what the Donald Trump side of things thinks about it.
Well, he doesn't exactly, I don't think, want to come out and say, no, I won't do that. I won't help the first-time buyers. What you continuously see every single day on the campaign trail is who can out-populist the other candidate. That's what it feels like to me, whether it is tax on tips, whether it is housing. It feels like no one wants to go back and say, child tax credits, that was a long-time Democratic goal. Now it seems like Republicans want to extend that. No one wants to say to middle-class Americans, no, the government is not going to help you out.
Drew Redding of Bloomberg Intelligence on this story. A little bit later this hour, we'll catch up with him in about 30 minutes' time. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Is Danny Berger. Hey, Danny.
Hey, John. U.S. Secretary of State Antony Blinken said Israeli Prime Minister Benjamin Netanyahu has accepted a ceasefire proposal to stop the war in Gaza. He said the next step is for, quote, Hamas to say yes. He called the proposed accord a bridging agreement, acknowledging that not everything is spelled out in detail. Before those comments, Blinken called it the best and maybe last opportunity to free hostages taken in the Hamas attack. He's now traveling to Egypt and Qatar for more talks to determine the next steps. The European Union is raising tariffs on Teslas imported from China. The European Commission said this morning that Teslas made in the country would be subject to an additional 9% levy on top of existing 10% duties applied to all foreign-made cars. Meanwhile, the proposed tariffs on other car makers have been slightly revised. MG maker SAIC, Geely, and BYD are each facing additional duties, 36%, 19%, and 17% respectively. The parties now have 10 days to provide comments and request hearings on the proposal. And Apple will make the most expensive iPhone Pro and Pro Max models in India this year for the first time. Its partner in Asia, Foxconn, will start assembling the new phones within weeks of the fall launch. Apple's push into production out of India is a major step to try to diversify its output beyond China. And that's your brief. John.
Hey, Danny, thank you. Up next on the program, Biden pushing the Harris agenda.
Selecting Kamala was the very first decision I made when I became our nominee. And it was the best decision I made my whole career. They'll continue to lead America forward, creating more jobs, standing up for workers, growing the economy.
That conversation up next, live from New York City. Good morning. Live from New York City. Welcome to the program. Quick check of the price action. Equities just about unchanged on the S&P 500. We've got some earnings in the next 24 hours. You'll hear from TJ Maxx and Target. Just getting a feel, more of a read for what's happening with the US consumer. Last week we heard this from Home Depot, and you're just getting an echo of it. Again, Lisa, from Lowe's this morning. They have to cut their full year guidance. Home improvement is a real struggle in this country.
How much is this because people are paring their expenses, and how much is this that they just built all of the garden sheds and all of the potential infrastructure for their children during the pandemic? I mean, how many home improvement projects can you do at a certain point? People want to get out there and spend on travel. I mean, this is basically the post-pandemic rolling ball of money spending that has shifted away from the home improvement and the housing sector.
Every time you cover these stories, it sounds personal.
Well,
it's like you've
personal.
been there, like you built the decking yourself.
You know, maybe I did. I mean, no, but this is exactly what they're talking about, are things like that people did during the pandemic that maybe they're not doing as much of, because how many decks do you need?
Home Depot, Lowe's, cutting their outlook in the last week. There's another one. Under surveillance this morning, Biden pushing the Harris agenda.
Selecting Kamala was the very first decision I made when I became our nominee. And it was the best decision I made my whole career. They'll continue to lead America forward, creating more jobs, standing up for workers, growing the economy, lower the cost to American families so they just have a little more breathing room. Kamala and Tim will continue to take on corporate greed and bring down cost of food.
So here's the latest. Democratic presidential nominee Kamala Harris looking to raise the U.S. corporate tax rate to 28% from the current 21%. This coming in response to questions around how the vice president would fund her economic plan. Ed Mills of Raymond James writes in the following. From Harris's economic speech on Friday, the overall theme of lowering the cost of key items picks up the shrinkflation mantle from President Biden, but takes it a step further. You can bet this means more scrutiny on M&A transactions. Ed joins us now for more. So, Ed, if you were to construct a trade off the back of some of these comments in the last couple of days, would it be long home builders and short consumer staples?
Well, I think long home builders from the kind of new tax credits for housing, the down payment assistance, as well as for the first time that I have really seen a push to have actual kind of supply side kind of additional housing units. But when we add in the child tax credit conversation, which now seems to be bipartisan, that's actually a nice boost for consumer spending. If we were able to go back to where it was an advanceable monthly payment, I could bet you that consumer spending is going to go up, especially in low and moderate income households. So I wouldn't kind of say this is something that would be long housing, short consumer. It'd probably be long both, quite honestly.
Ed, John mentioned Kamala Harris' proposals to raise the corporate tax rate to 28%. It feels like it's the same plane and different pilot when it comes to Biden versus Harris. How are you differentiating the policy proposals from these two individuals?
Yeah, Anne-Marie, you're right. As it comes to the tax policies, Joe Biden had proposed a 28% tax rate when the individual tax rates expire on December 31st of next year. I think this only happens if there is a Democratic sweep. I look to Kamala Harris's running mate, Tim Walz. In Minnesota, Democrats have had a tradition of increasing taxes and then winning re-election. They think that some of these tax policies are pretty popular with the American people. When we look to next year, when these taxes expire, if there is a divided Congress, there still might be a little bit of a maneuvering among Republicans. The chairman of the House Ways and Means Committee, a Republican, Jason Smith, he said he's polled all his members, and something that consistently comes up is that the 21% current tax rate might be too low, and there's openness within Republicans to raise that. So I do think that 28% is going to be too high. However, I could see next year, almost regardless of who wins, especially if it is Harris, there would be an increase in that corporate tax rate. But to your point, Anne-Marie, about kind of how to differentiate, we still haven't had that sit-down interview with Kamala Harris. We're still only getting some of the early details. There's going to be some tweaks. There's going to be some breaks. But for the most part here at Raymond James, we're saying whatever was the Biden-Harris campaign and administration is likely to be how Harris is going to propose things over the next couple of months and throughout her administration if she were to win.
Staying on taxes, because this is the big policy debate for 2025, Donald Trump has told us that he's willing to go as low as 15%. But isn't the corporate tax rate especially important for the fact that this is enshrined in law. This does not sunset like some of the individual tax enhancements we saw under the Trump administration.
Yeah, Anne-Marie, you're right. So if Congress does nothing, the corporate rate stays at 21%, but about $4.6 trillion worth of other taxes expire on December 31st. For a lot of Democrats, they're fine to let some of this expire, partly because of the fact that one of the things that expires is that $10,000 cap on state and local tax deductions. They would say taxes would be going back to what they were when Barack Obama was president, and it would be $1 trillion tax relief to blue states such as New York, California, Illinois. You go down the list. That's where compromise might come in. When you look at the corporate tax rate, for every 1% change, it raises about $130 to $150 billion. So going up to 28% is $1 trillion tax change. And when Congress is looking at this, they always get that score and try to see how much money that they want to spend or go into deficit and how much they want to raise on the other side. So when we look at other Harris proposals, calling for an increase in the tax rate to 28% gives her $1 trillion to possibly use on other priorities.
Ed Mills, you've been doing this for a very long time, and you've been trying to scrutinize policies, and it's refreshing to look at policy and try to analyze it. But at this point in the election, is it more theater than actual substance, given the fact that the likes of Michael Zezas of Morgan Stanley came out and said with the National Convention, Democratic National Convention, expect more political messaging than policy signals? This is about the vibes, the good feels, rather than actually anything concrete that we could possibly analyze. Is that kind of us trying to make something out of nothing at some of the utterances that probably won't see the light of day, depending on the makeup of Congress?
Lisa, you're right. The goal of the convention for Democrats is to keep the good vibes going, try to keep this honeymoon going for as long as possible. I'm always reminded of my saying of the, in politics, when you're explaining, you're losing. Most of the policies that have been put out there are either things that have been the policies of the Biden-Harris administration or things that are going to be very well poll tested. Usually you get a bounce out of the convention. For Donald Trump, he didn't get the bounce out of the convention, partly because Democrats stole that bounce by switching Joe Biden for Kamala Harris. But if they can get that bounce, we are only a couple of months away until this election. They're hoping to keep those good vibes going, keeping the momentum, seeing if they could expand the map and win some of those crucial swing states, and see if Harris and Walz can win in November. Explaining, getting into the details, being wonky, I don't think from a political perspective really helps them out all that much.
So, Ed, if it's just about the vibes, do you think protesters in Chicago could steal the limelight?
It is possible. However, I think one of the most notable parts of Joe Biden's speech last night was where he said those protesters outside have a point. Democrats know that in 1968, the protests and the divide that occurred in Chicago for the Democratic Party was a generational shift away from Democrats and something that destroyed their chances at the presidency. The protesters have come and been fewer than expected, trying to highlight the push to have a ceasefire, trying to tamp down on that disunity that has historically been within the Democratic Party. Is an opportunity, John, to possibly try to keep those good vibes going. And they know that's the biggest threat. So they are absolutely focused on that. And so, if they can keep that under control, I think you have to assume that this is a better chance for Democrats than anticipated.
We'll see how the week works out. Ed, it's good to catch up, sir. Ed Mills there of Raymond James on the DNC in Chicago. And we appreciate the Lisa rant, as always. We're going to clip that and play that for the next 2 months, just on repeat.
Yeah, and then
Every morning.
I'll go canoeing in Jackson Hole, because evidently, that's not going to be Blockbuster either.
You're going to send us pictures this year if you canoeing in Jackson Hole.
Yeah.
Okay, I'm looking forward to that. You taking TK?
Oh yeah, big time.
That's what I want to see.
Will he sink the boat?
The boat.
Okay.
Hey,
all right.
Hey.
Whoa.
Just got to sort of suggest the joke.
The audience mind.
8-day winning streak on the S&P 500 and looking to make it day 9. Your scores look like this. Equity futures positive by 0.06% on the S&P. On the Nasdaq, up 0.1%. The longest daily winning streak of the year so far. The longest winning streak going back to November of last year. And if you make it day 9, we're talking about the longest daily winning streak going back 20 years. Lisa, a ridiculous rally.
2004 is the last time we saw 9 straight days of gains, and it comes at a time where we begin with sort of this meandering, can we make it another day? And then the data just drips in to give a sense that, yes, this is an economy that's broadening out, and you're seeing it in the earnings, and you're seeing it in the underlying data. A lot of people say it ultimately lasts with the non-farm payrolls in September. That will really determine whether this can continue with this immaculate disinflation, a labor market that's not breaking down, and a consumer that can keep spending.
Sounds wonderful, doesn't it? We've all read the same notes. September 6th, just circled on the calendar. The payrolls report. It just repeatedly goes back to September 6th. This equity market, this rally, this bond market, all these moves are at the mercy of whatever we see in the August jobs report on September 6th.
Yeah, I wonder how much that's going to change as people talk about maybe CPI, or you talk about some of the auxiliary data when you make JOLTS great again. I mean, at a certain point, you've got other things that might come into play. But at this moment, because of the lack of certainty in the overall data, I mean, yesterday we had the leading economic indicators come out. They were actually really disappointing. Nobody talks about it. Everyone just sort of fluffs it away because it's not a major indicator and it's not jobs. So how are we going to continue with that kind of sense?
Another read on the consumer tomorrow. In the next 24 hours, we'll hear from TJX, we'll hear from Target as well. You'll get jobless claims as well on Thursday, so look out for that. Let's switch to the board and turn to the bond market. I want to sit at the front end of the curve just for a moment. The 2-year, really well anchored, Lisa, at about 4.05%. Just really well anchored going into this Federal Reserve get-together in Jackson Hole.
I love the narrative kind of shifts that we see. There was a time, I say 2 weeks ago, where people were talking about a hard landing, the likelihood of recession, and the Fed would have to cut more aggressively. Now you're seeing increasing pushback from Fed officials going into Jackson Hole against a 50 basis point rate cut, talking about the strength of the economy, and yet the need to reduce interest rates just simply to keep the same type of restrictiveness given how much inflation is coming down. It's that Goldilocks feel of immaculate disinflation returning once again. And that's the reason why you see a well-anchored 2-year with risk assets doing very well.
That's the bond market and stocks. I just want to finish on foreign exchange. Can we turn to dollar yen? Take a look at dollar yen. Some yen strength on the board, just a little bit, again, after quite a few weeks of it now on dollar yen. We're back to about 146. This story from the team out of Tokyo in Japan. The BOJ releasing a pair of research papers highlighting the persistence of inflationary pressure in the economy. The takeaway for a lot of people trading this currency, just the idea that another interest rate hike might be on the table. These reports, of course, came with a standard disclaimer that the views belong to the authors and don't necessarily reflect the BOJ's official stance, but obviously it's encouraged that talk overnight.
Basically, this one paragraph in particular, business price setting behaviors are shifting amid intensified upward pressure on wages. Just those words, upward pressure on wages, is enough to get people excited about the potential for further rate hikes from the Bank of Japan.
And a little bit more yen strength on the screen. Dollar yen 146.38. Under surveillance this morning, one of our top stories, US Secretary of State Antony Blinken saying Israel has accepted a ceasefire proposal to pause the war in Gaza. And the next step is for Hamas to say yes. Blinken will now travel to Egypt and Qatar to understand what their leaders are hearing from Hamas. There is just an impression in the last 24 hours that now is the time to finally get this done. We have a big opportunity to close a deal.
My big question is, with Antony Blinken coming out and saying this, does this mean that Benjamin Netanyahu has given his negotiators that room and that breath needed to potentially make that agreement? And this comes at a time when it's critical for the Democratic Party to shore this up. What happened yesterday when President Biden spoke to the DNC? You had thousands of protesters in Chicago, some of them even going through the fence, and there were arrests last night. So this is a huge issue going into the election, and I think that's why the pressure right now, and they keep saying this is a last-ditch effort, because they know that they need to get this done before November 5th.
All I can say is I hope that they actually do get something done on all sides, just simply because there is so much suffering right now, and the more that you can resolve that, there are human lives on the line. At the same time, a lot of people have thrown a lot of skepticism over just how willing people are to negotiate. So we'll keep our eyes on it.
We've come close before, and we've ended up without a deal. We've come in close now, and we hope we end up with a deal. I want to bring you the latest on a conversation we had with Donald Trump, the former president, defending his criticism of the Federal Reserve. In an interview with Bloomberg News, Trump saying, quote, "A president certainly can be talking about interest rates because I think I have very good instincts. That doesn't mean I'm calling the shot, but it does mean that I should have a right to be able to talk about it like anybody else." Lisa, you mentioned this a little bit earlier this morning, trying to draw a distinction between a change in policy and actually just as you were the same, I'm going to talk about it more and more, but ultimately it's not going to mean too much?
The problem is that traditionally a lot of candidates will say a lot of things and you kind of have a sense of what to take seriously and what not to. I feel like it's increasingly difficult to tell because at this point it's so light on policy and it's so light on exactly where a party is going to coalesce that it is very challenging to understand what the policy actually be versus the rhetoric. This just muddies those waters. So the people who want to say it's just noise, he's just trying to cater to a certain group of people can be loud. And the people who say, well, he actually wants to do this can also still be there. It's sort of, you can have your cake and eat it too and leave us all with less clarity on what actually is going to be policy.
Well, it's becoming clear that Fed independence has actually become a hot button issue in this election cycle. And a lot of this started in April when the Wall Street Journal came out with a report saying that actually there was plans being drawn up, a document that was being developed for a Trump 2.0 administration, the White House, to have more influence on the Fed's decision-making process.
What do we call that in foreign policy? Strategic ambiguity? Is that what this is?
Is that just sort
around
of
the Federal Reserve?
The ever-present
like
state of affairs in Washington?
Like the whole campaign at the moment,
exactly.
Doesn't it? Want to get you an update on some earnings. Lowe's delivering a disappointing outlook, cutting its full-year guidance as the soft housing market keeps consumers on the sidelines with big purchases and renovations on hold. The company expecting comparable sales to fall 3.5% to 4%. The previous range was an estimate of a 2 to 3% decline. That stock is down by about 0.9%. Lisa, we've said this a few times already today. This is just an echo, a repeat of what we saw from Home Depot just last week.
And they did outperform in the second quarter, so they did reduce their full-year forecast, but showing some bright shoots, I guess, under the hood. This also has been a pretty beaten-up sector year to date, so it's not like one of the big winners and is sort of casting some cold water. Are people going to go back to building decks? That's really the key question.
Would you like to build some more decking?
I would like decking.
This is so personal to you. I know it is. Let's turn to energy and the energy sector. The boom in AI spending putting a strain on the U.S. electrical grid as companies race to supply power for data centers. Powell is the CEO of Sunrun, a solar rooftop company, and says forecasts show the U.S. needing the equivalent of about 34 new nuclear plants over the next 5 years to meet rising demand. Mary's with us around the table. Mary, good morning to you.
Good morning to you.
Great to have you with us. First question, what is a utility exec doing at the largest rooftop solar installer in this country?
Well, what she's doing is helping to change America and bring more affordable, resilient energy to homes all across America. So as a utility CEO, way back in, I would say, mid-2000, 2005, 2006 era, it was so obvious, so painfully obvious to me that the utility grid itself was not a socioeconomic solution for the long term for America. With the pressures on costs and then climatic events, it was becoming very, very clear that we were going to end up where we are, which is over $100 billion spent last year, trillions on the horizon with no solution in sight to lowering costs for Americans and delivering resilient power.
Can you talk to us a little bit more about the initiatives that you'd like to see deployed to stabilize the grid at times when it's super stressed, when a demand is really, really high? What would you like to see happen?
Well, what I'd like to see happen is what we're doing expanded dramatically. So again, part of why I'm passionate about what we do, we just hit 1 million customers. That represents 1 million people with the ability to generate and in many cases store that clean energy and then supply it back to the grid when it needs it. And we are doing that all across America. In fact, we just did a proof of concept pilot using Ford F-150 Lightnings and showing how if you have that plugged into your garage, you can also support the grid and help make the grid more affordable and resilient for all. So the vision has always been the same, and it's what I did as a utility CEO, is that prove that having distributed generation assets all across America can help be the solution for bringing down the cost of the grid in the future.
There's sort of the next essential question we've been talking a lot with policymakers, which is how independent can the U.S. be while trying to provide renewable energy that's affordable to the United States? A lot of the supply is coming from China to create solar panels, to create some of the renewable energies. How much does the industry really hinge on ongoing access to those materials, to those supplies from China?
Well, from a supply chain perspective, the story's actually gotten stronger recently. So we're feeling really good about robust supply, both in solar and storage. But also with the Inflation Reduction Act, as you know, and the domestic content adders that are in that, what you're seeing is jobs, factories expanding in America. And so we expect to have access to more American-made panels in the future. And we also are already seeing significant benefits in the storage space relative to that. So, my view is what we do is the ultimate in energy independence. And not just for helping America become energy independent ultimately, but for those consumers. It is really powerful to have the sense of security, safety, and resilience in your own home when you're generating and storing that energy.
You talk about the IRA. There is a sort of pretty massive policy backdrop to this, and people think of the Biden administration as being more friendly to certain types of renewable energy sources. How vulnerable is the industry to some pretty significant policy shifts, regardless of depending on who gets into the White House?
From a foundational perspective, let's remember that when President Trump signed the extension of the ITC, which benefits the adoption of solar across America, and what I would also say is the Inflation Reduction Act has benefited states very broadly. In fact, a group of governors, Republican governors, just signed a letter saying that they really support the continuation of the benefits of the Inflation Reduction Act because they're seeing jobs in their states. They're seeing the kind of development that was expected with the Inflation Reduction Act. So we're feeling that when you're doing something that's benefiting Americans, the chances are those that represent Americans are going to want to see those incentives continued.
Have you seen an uptick of Americans putting solar in their homes or retrofitting their homes because of the Inflation Reduction Act, because of these subsidies?
100%. What you're seeing is very much in the space of low and moderate income, the energy communities, multifamily housing. We are absolutely seeing that it opened up the total addressable market, and you're seeing it become affordable and accessible to even more Americans. At the end of the day, our customers are saving money on average. They are, again, having a more energy independent, resilient way to power their homes and their lives. And that is very powerful. So hitting 1 million customers looks like just the beginning from my perspective.
To Lisa's point, though, about the supply chain, what is 60% tariffs of imports coming from China or 10% from around the world? What would that mean to your business?
It wouldn't be a positive move in the sense of the overall cost stack, but let's remember that actually the panels are relatively, when you look at the total cost stack, they're actually a smaller percentage of the pie. So it is something that we absolutely will address and work our way through if we have to face that. Again, it wouldn't be a positive for the industry, but we also look at it as something that we've had to deal with in the past. We find ways to navigate and move forward.
Can we finish where we started? 34 nuclear plants over the next 5 years. How many do you think we'll actually build?
Maybe none. So again, a huge part of why I felt it was so important to embrace distributed generation as a utility executive is I saw firsthand how hard it was to build anything anywhere. And it's not getting easier. Actually, what's happening is it's getting harder every single year, which also means it's getting more expensive because there's even more you have to do. So again, I was in a state, I built the state's largest wind farm. It was not large by energy standards and needs. It took 4 years and a lot of time and money to build it in a state that actually really embraced renewable energy. So again, these solutions, these big solutions that are needed are very hard, very expensive, and in many, many cases, particularly in the world of transmission, they're still talking about projects that they were talking about 20 years ago.
I'm going to walk away from this conversation quite fearful, so I'll give you the opportunity to help me correct course if you want. If you say we need 34 new nuclear plants over the next 5 years to meet this rising demand, but also say we might get none, what kind of crisis could we see in this country?
Well, I think what we're going to continue to see is we are going to see utility solutions come to the table for sure. But it is why I also really believe that this customer-led revolution to a more modern, innovative solution for the grid
can that fill the gap, do you think?
Is so powerful. When you think about it, I mean, what we're doing now can power a city the size of San Francisco for several hours of a day. We are scaling at a level of, in solar terms, 7 gigawatts a year, and we are installing now storage in the context of a couple of gigawatt hours a year. So as we scale and as America leans into those kinds of innovative technologies, 100% they can have a very, very powerful impact.
This feels like an ongoing conversation, so no doubt we'll catch up soon. Thanks for being with us.
Thank you.
Appreciate it. Mary Powell there, the CEO of Sunrun. Let's take the opportunity to get you up to speed on some stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hi, John. The investigation continues into a deadly yacht accident off the coast of Sicily. Morgan Stanley International Chairman Jonathan Bloomer is among those confirmed missing, along with British tech entrepreneur Mike Lynch and some family members. The Italian Coast Guard is leading search operations and has confirmed at least one person has died. Authorities believe the ship's mast snapped in a water spout, a form of tornado that forms over a body of water, with 12 guests and 10 crew members aboard. The easing cycle continues in Europe. Sweden's Riksbank lowered borrowing costs this morning for a second time since May. The central bank also signaled more cuts to come than they previously saw, now guiding to 2 or 3 more this year, setting a weaker outlook in both Sweden and abroad. The market has already been pricing in more substantial cuts as inflation undershoots the bank's 2% target. And Edgar Bronfman Jr. has made a $4.3 billion rival bid to take over Paramount. The media executive is offering to buy the Redstone family's national amusements for about $1.75 billion and invest additional funds in Paramount. The bid complicates the already accepted offer from Skydance. Bronfman is expected to argue that his proposal is better because it will cause less dilution. And that's your brief, John.
Danny, I don't know about you, but I refuse to discuss that story. Just refuse to. No more Paramount. I mean, seriously, it's going to carry on.
You know how I feel about this.
I think we all refuse to.
Well,
Up next on the program, get it done. The Harris housing plan.
My administration will provide first-time home buyers with $25,000 to help with the down payment on a new home. All to help more Americans experience the pride of home ownership.
That conversation up next, live from New York City. You're watching Bloomberg Surveillance. Stocks on the S&P 500 positive here by 0.1%. In the bond market, yields not doing much, just about unchanged. Your 10-year 3.8787. Under surveillance this morning, the Harris housing plan.
And by the end of my first term, we will end America's housing shortage by building 3 million new homes and rentals. My administration will provide first-time home buyers with $25,000 to help with the down payment on a new home. All to help more Americans experience the pride of home ownership.
Here's the latest. Former President Donald Trump responding to Vice President Kamala Harris's housing policy, telling Bloomberg the plan to provide $25,000 to some first-time home buyers is a, quote, big mistake and would cause a larger shortage of housing. Trump also adding he's still considering some help for first-time home buyers. Drew Redding, U.S. home building analyst for Bloomberg Intelligence, joins us now for more. So, Drew, you're the expert. How realistic is it that we can build 3 million new homes and rentals in about 4 years?
Good morning. And look, it's good to see housing getting some attention this election cycle. It's an issue that matters for so many Americans. So it's good to see it at the forefront here. There's still a lack of details on the plans, how we're going to build this many houses, what we're going to do to make it affordable. There's been some discussion on offering builders tax incentives or opening up federal land. So the details on that remain to be seen. As it relates to the $25,000, given the first-time home buyers, I think you run into the issue where, you exacerbate the problem that you're trying to solve. I mean, we don't have to look too far back to see that when you put that type of money in consumers' pockets, prices tend to rise. So you could expect to see that when, if consumers were given this type of relief, it exacerbates the inventory shortage and it raises home prices. So that's definitely a concern.
Well, it also might be bipartisan. At one point in our interview with Trump yesterday, he said it was a big mistake, the idea, but then he still said, I might do that, and whether he would also offer anything to prospective house buyers. So you think potentially if this was to be a policy out of Washington, this would increase demand and then would potentially increase the cost of buying a home?
Certainly. I think when you're increasing the purchasing power of the buyer, you're going to have sellers that realize that and raise prices. It's also going to create more demand from those buyers, and you're going to see the inventory shortage that we see in some markets exacerbate it. So, yeah, I definitely think that's a significant consideration.
I'm curious, Drew, about where we are currently in the housing market. We have gotten some pretty dire data in terms of sales volume. We still do see prices continue to increase on average for homes, and we're seeing some pretty bleak earnings reports. We got that first from Home Depot, and then this morning from Lowe's. How much is this just that people did all of the do-it-yourself projects during the pandemic and are kind of exhausted by it all? How much is this just truly a lack of capacity or willingness to invest in homes because there is this sort of stasis, this ice world going on in the housing market?
Yeah, so when you talk about the home improvement market specifically, there's a couple factors going on. And I think, the most important is certainly the housing market. We're below a 4 million annualized rate on home sales. We're at the lowest level in several decades. So certainly when you don't have that type of turnover in the housing market, you lose that investment associated with the homeowner, fixing their house up before they sell it, or someone making alterations as soon as they buy it. At the same time, what the industry is going through over the last, several quarters is a shift away from goods to services. So if you look at durable goods spending, you could see particularly in the home improvement space that we've started to normalize. I think the good news is that we've kind of gotten to that more normalized pre-pandemic level. So we think that will have less of an impact going forward. But housing is certainly something that's going to continue to weigh. We think that with interest rates starting to pull back now, you could see a little bit of relief. We saw it in some of the mortgage application data on both the resale and new home front. So we think as we exit the year, if rates can continue to play nice in the low 6% range, we think you'll start to see a little bit of benefit on the margin.
Okay, that was fantastically couched. That if we see well-behaved rates going to around the 6% level, how much do benchmark rates have to drop, do mortgage rates have to drop to start to see a housing market that resembles anything of the activity that we used to see? And I'm not just talking about the go-go days of some of the bubbles, but I'm talking about just a healthy market where you can buy and sell a home.
Yeah, it's a great question. We saw when rates got to kind of the 5.5% range has been defined as kind of the sweet spot. We heard that from a lot of builders that when we got in that mid 5.5% range, that more traffic started to come through the door. So we think that's kind of the number that you're looking at. That being said, you still have a lot of people out there who currently possess mortgages below 4%. So we don't expect a massive unlocking of demand if rates continue to fall. And you have to, at the same time, you have to remember it's not just rates, it's home prices. Prices are up more than 40% since pre-pandemic levels. So I think affordability is going to remain a challenge until we could somehow unlock more supply. We are seeing that in certain markets. We think the way the cycle's kind of evolving is more regional. When rates rose in the second half of 22, you saw more weakness out on the West Coast and some of the higher price markets. You saw some price adjustments there. Now we're starting to see that in the Southeast, and the markets that really come to mind are, Florida, even in Texas, where more inventory is starting to come to market. Yeah. And we think that could put a little downward pressure on prices.
Hey, Drew, appreciate the update. Thank you, buddy. Drew Redding there of Bloomberg Intelligence. Classic policy dilemma. Duration mismatch between demand-side solutions and supply-side incentives. Demand-side solutions are immediate. You get that money straight up all at once, go out, buy a house. Supply-side incentives take much, much longer to play out, and you end up ultimately with higher prices. And you see this again and again and again. It's good politics, it's popular. It's economically complex.
When you start to talk about cold, hard cash, it feels good. But then you think about if everybody has it, well, then guess what's going to happen to prices? You could extrapolate this out further. If everybody is talking about incentives more broadly, how much are we talking about a higher inflation rate going forward, just in general, because of the consumer ability to spend?
When asked about this, Trump said it's a big mistake. It would mean a shortage of housing. It would increase price of housing. But then still he said, I also might do it. Populism, both sides.
You see this again and again on both sides of the aisle. Saw it in the UK as well. Same story. Coming up next on this programme, Bob Michael of JP Morgan Asset Management, Jeannette Lowe of Strategas, Lee Klasko of Bloomberg Intelligence, and Mike Pyle, Economic Advisor to Vice President Kamala Harris. You're watching Bloomberg Surveillance.
The inflation genie, I would say, has not been completely slayed.
It's the data that's driving the market's reassessment of how many rate cuts need to be done this year.
There's no doubt the Fed will go in September.
The idea of getting an extra even 30 to 40 basis points priced in, I think that's really a tough thing to ask for.
Those who are thinking that this rate cut is going to change Main Street are overestimating the power of 50 basis points on the street.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance begins right now with equity futures on the S&P just about unchanged, on the Nasdaq just about positive after a stellar run in this equity market. 6 days of gains on Nvidia. That stock is up by more than 24% over that period. 8 days of gains on the S&P 500. That index is up by almost 8% over that period. And Lisa, the equal weight coming into Tuesday at all-time highs on the S&P 500.
Which highlights how this has been a broad-based rally, which is what a lot of people wanted to see to really confirm the health of the stock market and the health of the potential rally that people are seeing. Key question here is, can one jobs report torpedo that? Or is this basically going to be an era in which rates are going to come down into strength, which is essentially what this market is betting on?
We keep going back to the same calendar. September 6th for payrolls, 11th for CPI, 18th for the Federal Reserve, and Anne-Marie, a lot of politics in between.
A lot of politics in between. Lisa will be at Jackson Hole. I'm going to be going to the DNC. And for this market, Jonathan, what are they going to be focusing on? They're very data dependent, but every day we still get policy proposals. And then the Committee for Fiscal Responsibility comes out and says, this is how much that will add to the fiscal deficit. And how much at some point is the bond market, to Lisa's point, going to be pushing back on that?
Lori Calvasino of RBC was on the programme yesterday, and we asked her, is there anything to critique here? And what did she say? No.
Yeah.
Basically, no. There's nothing to critique here. It's very hard to analyse something when you don't have any real details.
This is the problem, and we keep hearing rhetoric and vibes, and this is sort of the moment that we're in, and I'm deeply frustrated. I'm not going to hide it. I know everybody thinks I'm hiding it. I'm not. I mean, it's frustrating because you want to get a sense of what we can actually work with other than just sort of gossip and political kind of noise, and it's not a lot right now, and so you do wonder at what point you can take them seriously and what point you can't. Right now, light on policy, we're hearing that pretty broad based, so you have to go with the economic data, and the economic data has been pretty good. And what you hear from earnings is a consumer that's not falling off a cliff. We'll get the latest read today with Target, which maybe will give some of the same flavor as Walmart. I think that'll be important, but really the big event is next month when we get jobs and CPI, and then the Fed potentially cutting by 25 basis points.
Two things. One, I don't think anyone thinks you're doing a good job of hiding it. Two, I'll turn to some of the earnings as well. Lowe's this morning cutting guidance on soft DIY spending, the housing market. Saw a similar thing on Home Depot. Difficult to get a read on the US consumer when you see retail sales doing so well. You get all these conflicting reports from consumer-facing companies over the last few months.
It's difficult unless you drill in and look at the specific industries that are really moving and not in sync. The housing industry has consistently been sort of the outlier in consumer spending. And we heard that from Drew Redding, that why do people spend on new decks? They do because they buy a new home, and then they want to build a new deck. I'm just using this as an example.
Sure, of course, yeah.
But
you didn't buy a home or build
a new deck. But the issue here is, that's when you have those do-it-yourself projects. If you don't have that churn, which you basically don't because you've got a frozen housing market, that's why you start to get lower earnings. And so that's the reason why it's sort of idiosyncratic, but I hate using that word. So here we are.
I think Joe Quinlan did a really good job talking about the bifurcated consumer. Top 10%, he says, of U.S. households are responsible for 21% of total U.S. consumption, more than the bottom 30% of households combined. It's two different economies depending on where you are on the income scale.
Lowe's right now down by about 1/3 of 1%. The broader story, if you are just joining us, equity futures positive here by 1/10 of 1% on the S&P 500. A little bit of a lift. We've given you the stat a few times already this morning. It's worth repeating. 8-day winning streak on the S&P 500, longest of the year so far. If you make it day 9, it's the longest in 20 years, which is absolutely phenomenal. And it's not been a small rally either over the last 8 days. We're talking about a rally of almost 8 percentage points on the S&P 500. In the bond market, just about unchanged on a 10-year, 387.68, and the euro going absolutely nowhere, just short of 111 at 110.82. Your lineup this hour looks like this, with Bob Michele of JP Morgan Asset Management on his outlook for the Federal Reserve, Jeannette Lowe of Strategas as Biden passes the torch to Harris, and Mike Powell, the economic advisor to Harris, on her policy platform. We begin with our top story, the S&P 500 notching its longest winning streak since November as traders weigh the Fed's path ahead. Bob Michele of JP Morgan Asset Management laying out his timeline, writing the following. We expect 25 basis point rate cuts at each FOMC meeting in 2024, and then quarterly in 25. A consistent rate cutting cycle is the essential ingredient in our forecast of a soft landing. Bob joins us now for more. Bob, good morning.
Good morning.
Everything and nothing has changed since we last spoke, because I think we last spoke on Federal Reserve Decision Day 2 days before that scary jobs report, which we've all moved on from. What's your take on where things have been over the last couple of weeks?
But so much has changed. We were sitting here on Fed Day and we were saying, just get through this meeting. You have a free intermeeting meeting with Jackson Hole. You can wait and watch the data and have a do-over before the September meeting. And here we are at Jackson Hole, and they should take the do-over. They looked at the employment data, it softened up. You look at the inflation data, it's come into where they would like to see it. I would use this Jackson Hole conference to set the time frame and expectations for the market. We're going to cut rates. This is the shape it's going to take. These are the things we're looking at. There's a gift. On the other hand, I think they should just do nothing. All the data has come their way. They've guided us to a feathery soft landing. Just don't mess it up. Start cutting rates in September, and let's get on with it.
You're talking about what's needed, the essential ingredient for that feathery soft landing. And it's quite a course still. You're looking for 3 cuts this year at 25 basis points, and then again through 2025. Just this consistent rate cutting cycle you've described. Why is that the essential ingredient? Where do you think neutral is? What is restrictive? What's accommodative? What do we need for this economy that we have?
Because inflation has come from here down to here, and it's still on that downward trajectory. If you look at the 3-month annualized rate of core CPI and the expectation on where core PCE is going to be, they're sub 2%. So inflation has come down a lot. You're hearing from a lot of the retail market as they're announcing earnings. There's some consumer pushback on pricing. They're choosier about what they're spending on, and that's hitting the top line. So inflation is coming down. You look at the labor market, slack has been created. We've got unemployment up at 4.3%. We're not at 3.4%. You look at wages. Wages dropped from 3.9% year over year to 3.6% year over year. If you leave restrictive rates at the level they're at currently, then that worsens the labor market. And then you've got not a problem with inflation, but the pace of disinflation. You've got to start relieving the pressure on businesses and households.
Why do you think that we haven't seen a more aggressive slowdown then, if this really is because of the rates? And I ask this because I was looking at data compiled by Evercore ISI's Julian Emmanuel showing that you're seeing the S&P 500 second quarter year-over-year earnings per share growth at 10%. You're seeing profit margins that are expanding. How does this scream a market that's on the brink of falling off if you don't get those rate cuts that are pretty significant?
Well, there's still a lot of money sloshing around in the system. What I'm talking about is slowing down to trend and then bringing policy in line with stabilizing growth and inflation around trend. What Julian's talking about is, hey, there's still a lot of economic activity out there. He's right. I was listening to Mary Powell earlier from Sunrun. She's talking about everyone accessing the wonderfully named Inflation Reduction Act to spend and invest in solar. There's all that money still in the system. it is creating an underlying level of economic activity. It's probably one of the things you need to ensure that a soft landing actually occurs and you don't have recession.
So you said that Jay Powell should both do nothing, but also should sort of telegraph some kind of path ahead in the Jackson Hole
That's what I want.
Today.
I want a very clear roadmap.
All right, so you want a clear roadmap, but you don't expect him to do it because there's absolutely no advantage to him doing that.
None.
Okay, so what do you think actually could be the roadmap beyond this year that he could give with any clarity, given the fact that you're talking about some of that income that people received that has helped fuel some of the price inflation that could reprise itself next year, depending on some of the policies that may or may not be fact that we're hearing from both candidates?
Well, that keeps a $27 trillion economy operating at $27 trillion. That's okay, but how do you start building some real growth upon that? You need the housing market to reignite again. Clearly, there's demand for housing. There's a 3 to 4 million unit housing shortage in the US. You bring down rates, it pulls down mortgage rates, that suddenly makes housing affordable again, and you get the first-time buyers to step in there, and all the things that you talk about, building decks and stuff like that, begins to happen. So it's one of the things that bringing rates down actually does. It's not that a quarter 50 basis point cut doesn't do anything. It actually does a lot. A lot of businesses and households fund themselves off of the floating rate market.
Well, when it comes to housing, what about $25,000 for new homeowners? Also in what you love to hear this week, but are unlikely, is a detailed economic plan from Kamala Harris. What do you make of what we heard so far?
I think the DNC is in the same position as the Fed. The data has come their way in a big way, and they're well ahead in the polls. So just get through this conference with a lot of platitudes and euphoria and take that momentum. I don't think we're going to see a detailed economic agenda. I think 25,000 housing credit, it's a great idea. Who ends up paying that bill? Does it just get sent to the Treasury and there's more funding that comes out? Probably. Will it ever get through a split Congress? Maybe not.
We don't have detailed proposals, but she is basically running on the Biden platform, and Trump was already president before. They are incumbents. How do you think about 2025 when you think about these two individuals potentially being in the White House?
I think we've gone through periods where the administration has had very clear views on what they want to do, but if you have a split Congress, they've got a very different mindset, and it's very difficult to get legislation through. So I think the real focus should be looking at Congress, looking at the House, looking at the Senate, and seeing how those elections go.
Let's work through your calls just to wrap it up. Long duration, curve steepness, stay overweight credit. I just want to pick up on the duration point. Explored this with Kelsey Barrow yesterday. I want an idea from you on where you think yields are heading. This time next year, what kind of yield curve are we going to be looking at? What kind of numbers are along the bottom? What are you looking for?
So intuitively, I want to say where yields are today, the Fed has to bring rates down to 3.5%. That's 200 basis points. That's a lot. That's pretty normal in a cutting cycle, and cutting cycles are usually coincident with recession. We don't see a recession, but a 3.5% Fed funds rate is 1.5 real. That seems to be a fair level, and the curve's price for that. Then I look at all the money still sitting in cash that's out there. I think of every single client conversation I have every day. It doesn't matter if it's institutional or it's in a wealth management platform. It doesn't matter if it's domestic or international. Everyone is looking for a way to get into the bond market and frustrated beyond belief because they never got to buy at yields of 5 to 6%. And once rates start coming down and money market fund returns start to drift lower, that money will come in. And that money's not thinking about, oh, I want to buy the 10-year, I want to put on a 2s10 steepener or flattener. The market's thinking, put me in an aggregate bond fund, put me in a general muni bond fund. Do you have an income fund? Okay, put me in there. What kind of ETF do you have? Do you have a Core Plus ETF? Put me in there. And that money comes into the market in a big way. And asset managers may sit there and say, oh, you know, yields are a little rich. I'm going to be underweight duration by a quarter of a year. So they're still buying 6 years of duration. They're underweight by a quarter of a year, and that money's coming in. So I worry yields could get down to 3% or even lower.
3.0?
Yep, 3.0.
On 10s?
On 10s.
Is that process started?
It's started in just the tiniest drip of ways, which I've always turned around and said, look where yields are. And everyone's telling you, oh, we don't like them here. We don't like them here. Look how far through the Fed funds rate are. Look how cozy it is at 5.5% in cash. Then who the heck is buying to take the entire yield curve down through 4%? There's a lot of buying of money that's leaking in, but it has not come in earnest. That process hasn't started.
Bob, this was fun. Thank you, sir. It's
Always
good to
a
catch
pleasure.
up. Appreciate it. Bob Michael there of JP Morgan Asset Management with some very interesting calls on what isn't happening and will happen in fixed income over the next year or so. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Eli Lilly Zepbound cut the risk of diabetes in patients taking the weight loss shot by 94%. In a statement, Lilly outlined the results of its 3-year study where more than 1,000 patients with obesity and pre-diabetes received either Zepbound or a placebo. Those on the highest 15 milligram weekly dose also lost about 23% of their body weight. Lilly said detailed results will be presented at an upcoming medical conference. Alaska Air Group and Hawaiian Holdings are now closer to finalizing their $1.9 billion merger. The waiting period for the Justice Department's antitrust review has now expired. The deal is still subject, though, to approval from the Department of Transportation, which can impose conditions to ensure the deal serves consumers. And Donald Trump is downplaying criticism that he has undercut the Fed's autonomy. In an interview with Bloomberg News yesterday, the former president said he thinks it's fine for a president to talk, and it doesn't mean they have to listen. Trump also called Harris's plan to offer first-time homebuyers $25,000 a, quote, big mistake. But then he went on to say that he also might offer help to struggling prospective homebuyers. And that's your brief, John.
Big mistake. Might do the same thing. Got it. Danny, thank you. Up next on the program, Biden passing the torch to Harris.
Because of you, we've had one of the most extraordinary 4 years of progress ever, period. When I say we, I mean Kamala and me.
That conversation up next, live from New York this morning. Good morning. Live from New York, welcome to the program. Equities right now just about positive by 0.1% on the S&P 500, already on the longest daily winning streak of the year so far. Under surveillance this morning, Biden passing the torch to Harris.
Because of you, we've had one of the most extraordinary 4 years of progress ever, period. When I say we, I mean Kamala and me. She's tough, she's experienced, and she has enormous integrity. I need you to win back the House of Representatives. And above all, we need you to beat Donald Trump.
Here's the latest. The DNC kicking off its second day with Barack Obama headlining the slate of speakers later on tonight. Vice President Harris and Governor Walz stepping away from the convention to travel to Milwaukee for a rally as they push forward their economic agenda. Jeannette Lowe of Strategas writing the following. Her policies are generally in line with those of Biden, but lean a bit more progressive. This does allow there to be more of a policy debate between Harris and Trump, but we also have the two primary candidates now proposing price controls or greater tariffs. Jeannette joins us now for more. Jeannette, let's start by talking about the distance between not just Harris and Trump, but Harris and Biden, and then we can try and get into some details, which I know is a bit of a struggle at the moment. As you join us from the DNC, and as you hear the words come from the sitting president, when I say we, I mean Kamala and me, does that help her or hurt her?
Well, I think one of the biggest things we saw last night was the unity within the party at the convention. You know, Biden got Not probably the night that he wanted at the convention, but he definitely kind of got the send off. He got the big cheers and raucous applause and the thank yous and all of that. But so it shows definitely the unity within the party as it moves from Biden to Harris. I think also you had the Democrats approve their policy proposals. You kind of saw that it was basically the Biden plan. Harris is going to start to make some changes to her policies to make them a little bit more different from what we had under the Biden administration. But in general, you're seeing a continuation of what his policy proposals were. And then she's trying to take some of those a little bit further. So there is not a lot of daylight between what you would have had for the policies under Biden or the policies under Harris.
I'd love to talk about potentially one area where we can see Kamala Harris really debating what to do, and that's at the FTC. Some of the big donors that support Kamala Harris want her to ditch Lina Khan. But of course, that was a Biden pick, and the progressives want to keep her. Do you have any understanding what an FTC could look like under Kamala Harris as president?
Well, I think that, so if you look at just kind of her background as a prosecutor, she's definitely kind of looking to still do some antitrust pieces. But anyone who does come in may want to actually have their own people in the various agencies. And that also might just even depend on, how she feels that Lina Khan is currently working in that agency and what she wants to do moving forward. So I don't have a good idea yet if she might make a change at the top there. But I think that's something that Harris is still going to be quite focused on. This kind of goes back to the price gouging proposal that she made on Friday. So that's something that she's still going to be looking to doing.
When it comes to the price gouging proposal, this is something that the Republicans have really just taken a hold of to criticize Kamala Harris. You're at the DNC. What are Democrats saying? Because I've heard to Democrat-leaning economists who say, we hope that this is just rhetoric and not actually reality. I'm thinking of Jason Furman. What are you actually hearing at the DNC when it comes to this? Do they feel like they fell short on proposing this idea because of the criticism it's gotten even within their own party?
Yeah, I think the biggest thing is that the Democrats are trying to focus on affordability issues. This has been an election about inflation for most of this cycle. And so there still know that there's voters out there who are concerned about the affordability issue. They're concerned about the fact that Trump does poll better on the inflation and economy. So they're trying to create proposals for that. You do have some Democrats who are saying this is more about consumer protection. This is just more about antitrust, making sure there's not large mergers within the food industry. So I think some people are kind of walking it back a little bit, and some people are saying it's not that big of a deal. But I think obviously the devil's in the details if it actually comes to pass. But I think this is just one of those proposals that's been put out there to be standing for something at this time.
I think it's worth repeating, Jeannette, just to explore this a little bit further. What's the difference between what you think they're proposing and what we already have?
Right. And I think that one of the biggest things, too, when you're seeing things with, Biden and Harris. So, for instance, they both had a housing down payment assistance. Harris went further. She went from $10,000 to $25,000. Well, a lot of those things were difficult to get done even when Biden was in office and we had Democratic control in the House and Senate. So what is that control going to look like in 2025? That's going to be really important for what Harris can get done. Obviously, there are things that you can do at the executive level that you would have the ability to do without Congress. But Congress is going to be really important if you want to do things like childcare or paid family leave or the like, which I think is where Harris is really much more focused. I feel like that's more of her bread and butter issues that she really wants to move forward for this agenda.
Jeannette, just to get to Congress, to finish there, what's happening down ballot? Do you see the same momentum there as you do at the top of the ticket?
Yeah, so I think this is one of the biggest things that people are watching is whether or not Harris is going to really provide some good momentum for down ballot races, particularly in the House. That's where Democrats really do have an opportunity to win back the chamber. They only need a net 4 seats to do so. And they're looking at, what are their fundraising numbers? They're seeing support. You're starting to see voters who were less enthusiastic about a Biden ticket being more enthusiastic with Harris. They're coming home. They're less likely to focus on not voting or voting for a third party. You're seeing increases with African-American voters, Latino voters, young voters. That's important. And so that momentum can help the Democrats in races where there aren't even swing states for the presidential race, states like California and New York. That's where Democrats have an opportunity to take back the House. Of course, it still might be a very, very slim margin. Even in 2025, we could still have just a small margin there. So it's still going to be a very tight Congress, and that's going to have an impact for what these policies can be by the next president.
Jeannette, appreciate the update, and thank you for making it to the airport on time and getting to the DNC in Chicago. Some of our colleagues struggle to do the same thing. Jeannette Lowe of Strategas.
Really? Shots
like
fired.
I control the weather.
You know, just throwing it out there. Jeannette can't control the weather either. And
maybe
she's there
she
in
drove.
Chicago. She could have driven.
12, 13-hour drive. It's
maybe
tough.
She was that dedicated to the cause.
Really?
She drove.
So you're gonna put.
I'd like to see you drive to your next big field shoot.
I wouldn't be driving.
Exactly.
I don't think anyone wants me driving anywhere.
Doesn't have a license.
No one wants to see that happen either. Coming up on the program, the biggest US port seeing a wave of imports rivaling pandemic levels. Some stellar numbers, just absolutely phenomenal, coming out of the West Coast and elsewhere. We'll catch up with Lee Klasko of Bloomberg Intelligence next on the program from New York City. This is Bloomberg. An 8-day rally on the S&P 500 taking gains towards almost 8 percentage points over that period, and the bullishness continues. This from Julian Emanuel of Evercore. Lisa mentioned him earlier. Strong earnings, a Fed set to cut, and macro saying prospective soft landing. All of that skews the S&P 500 to 6,000 by year end. I mentioned this quote from Scott Rubner of Goldman a little bit earlier this morning. The pain trade for equities is higher. Lisa, the bar for being bearish at the beach into a Labor Day barbecue party is high.
Especially because the economic data is cooperating and you've got this earnings. And, we had a dip. It lasted about a day and people are aggressively buying it. It was sort of this feeling that maybe things were getting washed out, some of the imbalances in markets. Not fully, but enough for people to get really excited. Key question to me is, can the equal weight S&P continue to outperform the index level of market cap? Because that indicates some of the healthy broadening out that so many people have been looking for.
Equal weight S&P at an all-time high coming into Tuesday. Let's turn the page, switch up the board and get to the bond market and talk about a range-bound bond market, which is music to the ears of a lot of people in equities who have seen this viciously go one way to the next. The 2-year about 4.05%, down about a basis point this morning, but this is basically where we've been anchored now from point to point over the last week or so, just in and around 4%. This came from Ian Lingen yesterday of BMO. I think it's important to reflect on some of the Fed speak we've had over the last couple of days. The fact that someone as hawkish as Kashkari is discussing cuts in less than a month implies a 25 basis point reduction in September 18th would be a unanimous decision. The more relevant question is whether a simple majority would endorse a supersized 50 basis point move. So I guess we've got to ask, how important is unanimity to Chairman Powell on September 18th?
So far, it's been very important to him, right? This has been something that he's been trying to get, and we've seen a lot of pushing and pulling to try to wrangle people together. One reason why people are looking at the minutes tomorrow is to see how seriously they discussed a 50 basis point rate cut at the September 18th meeting. Bigger question is, why should Jay Powell do anything other than just echo the likes of Neil Kashkari, of Austin Goolsbee, of the Hawks and the Doves that are all lining up behind the same kind of sentiment? Blake Gwynn over at RBC Capital Markets put this out. Jackson Hole, why be anything but boring? Well, I can tell you that maybe if you canoe and talk about things, you'll be less than boring. But he says Powell has nothing to gain by micromanaging expectations 2 weeks out from a crucial NFP print. This is really the key. Is the 25 or 50 basis point debate really going to hinge on what we get on September 6th?
Yeah, I don't think this has to be too dramatic. Just talk about progress, where we were, where we are. Talk a little bit more about risk management. That the risk management story is a much bigger story now compared to where it was 2 years ago. We've got super low unemployment and super high inflation. Going back to, August of 22, the pain speech, the 8-minute pain speech you talked about yesterday, different place now. So we can start to think about reducing interest rates to protect and insulate ourselves from further weakness down the road.
If you want to understand the drama of a Jackson Hole speech, it's just whether Jonathan Farrow is going. You're not going this year. We will be there. I will be there with Tom. We will be boating and hiking together, and we'll also be talking to some Fed officials. Not much by way of fireworks is expected, but I think that it's going to be interesting to hear on a longer-term trajectory what they plan in terms of the range of inflation and just how they view the changing role of Fed policy. This is my pitch, this sort of question about whether they are preemptive with their rate cuts.
There's a line I like from the Federal Reserve, and it goes something like this. An ounce of protection is worth a pound of cure. And I just wonder if the same applies at this Jackson Hole meeting, where they sit around and think about the prospect of further weakness down the road and getting ahead of some of it.
What happened to the whole idea of a higher neutral rate, of the whole idea that we were talking about 2 months ago about inflation reaccelerating? Even, as Bob Michael talks, the delta between, this rush of cash from money markets into the rest of the fixed income market from some of these programs, these incentive programs that we're hearing about coming to the fore and being inflationary and tariffs and all the like. I mean, talk about whipsaw, but that's not where we are right now for the narrative.
Let's see if we have that discussion later on this week. You can lead that discussion.
Thank you.
In Jackson Hole, Wyoming, alongside TK. Let's turn to dollar yen. Dollar yen right now, 146.46. We're negative by about 0.1%. That is just a touch of yen strength. It was a different story earlier on in the session. The higher the session was actually 147.35. And then the BOJ released a pair of research papers highlighting the persistence of inflationary pressure in the economy, and a lot of people started to read between the lines, Lisa, about what this means for policy further down the road.
So the bigger question, I guess, is does this just sort of indicate how much the carry trade is over for Japan and sort of shorting the yen, given the fact that every tea leaf really highlights just how far the Bank of Japan has gone from this era of do nothing and keep rates extremely low. People are going to view this, even though there is that disclaimer that you put out there, these views are independent of the researchers and not representative of the Bank of Japan. Still, the fact that they talk about price pressures and wage appreciation was enough to cause yet the next leg of a rally in the yen.
Bit more yen strength for you, 146.48. Under surveillance this morning, just to get you up to speed on some stories elsewhere, Alaska Air and Hawaiian moving closer to finalizing a $1.9 billion merger after the Justice Department declined to challenge it. The airlines still need approval from the Department of Transportation, which has to determine that the acquisition, Anne-Marie, is in the public interest.
This is big and notable because this is probably the biggest hurdle if you want to have a merger to be able to go through. If you're JetBlue and Spirit waking up this morning, you're saying, hey, how are they able to do this? Part of it is because they didn't share as many of the same routes, and they think that actually now this means more competition, especially if you're a consumer in Hawaii and want to get to mainland United States. So that's one of the reasons why. And also the fact that JetBlue versus and Spirit, the concern was that JetBlue would not keep that pricing that Spirit had, that for that low-income individual. But this is a big deal because we haven't seen much M&A activity given what we've seen from this DOJ and FTC.
Do you sense this is an exception rather than the rule right now? I'm thinking more of Kroger and what might not happen with Albertsons as well, particularly after what we've heard from the Harris administration, or rather the prospective Harris administration and their proposals coming out of the campaign.
Although Kroger is now saying that actually they have a plan that this would cut grocery prices. So maybe that as they're under this antitrust review, maybe that will help them. But this does feel like an exception, which is why I keep comparing it to what happened with JetBlue and Spirit. This seems like an exception because of the differences in both of these two combining forces.
It also, I mean, not to be cynical, but you could say that if someone's going on vacation to Alaska or Hawaii, they want their vacation to be a decent price and they can go on, and it's not sort of the staple that is going for groceries, so that if it, ends up getting jacked up a little bit, that they can still choose to go on that vacation or not, versus going to a grocery store and, buying oranges.
Got it. You think people should sacrifice their trip to Hawaii?
I don't think so.
I'm just trying to read between the lines here.
But I think that there's sort of a less maybe imminent feeling that this is going to affect consumer prices for the masses in the same kind of way.
I think a lot of people would agree with you, Bramo.
Thank you.
We'll leave that story there. Let's turn to this one. Apple's first India-made iPhone Pro models are coming this year. Sources telling Bloomberg the company's partner Foxconn will begin assembling the new devices within weeks of their global launch in the fall. Lisa, this is a story we've been tracking for quite a while. De-risking the supply chain, which is kind of like a long-winded way of saying moving out of China.
And it comes without announcing it. And this is really one of the most interesting aspects. Tim Cook, the biggest diplomat between the United States and China, talking about the importance of China, both with respect to the consumer base as well as the production base, but just quietly moving away from production in the region. And oh yeah, the consumer is also pushing back against them. So can they also build some sort of consumer base in India that has traditionally gone for a lower price type of phone? These are some of the questions that have been plaguing Apple. This move seems to suggest they are starting to shift.
Although it's tiny, still, when you look at the vast majority of these phones being made, they're going to be in China because it's cheaper. But whether you talk to Republicans or Democrats, they're still pushing this idea where you started, friendshoring. Why? Because the risk and the geopolitical salvos between Washington and Beijing that are unnerving the C-suites.
Lisa nailed it. This is happening quietly. is the diplomat, Tim Cook, just quietly operating and moving things around without making too much noise. Because you don't want to upset the Chinese, given how much of a presence you've got in that country.
But you got to take action. And if you don't take action, you're going to be left flat-footed, and that's what you see out of Tim Cook.
Talk about de-risking the supply chain. Let's turn to this. Just some stunning numbers coming out over the weekend. The ports of LA and Long Beach, which account for nearly a third of all US container imports, posting their third strongest month ever in July. The frenzy of volume is rivaling the all-time high set during the pandemic, standing in contrast to concerns over a cooling economy. Lee Klasko of Bloomberg Intelligence joins us now for more. Lee, I want to talk about what's behind it, but I want to start with how much better they're handling it. We've caught up with Jean Soroka, who heads up this port, a number of times over the last few years. Can you walk us through the productivity enhancements these ports have gone through, the progress they've made to better handle this kind of volume compared to where we were a few years ago?
Yeah, so like a few years ago, there was a lot of issues with the throughput at the ports just because there was a lot of congestion at the ports due to the surge in demand following the pandemic. You know, where we are today, you know, the ports in the U.S., you know, they have gotten a lot better over the years, but, you know, they still are very slow to embrace technology and automation. Relative to some of their counterparts in Asia and in Europe. But, you know, what it seems like from our vantage point is that the ports still have plenty of capacity within them to continue to keep that throughput at good levels. You know, the surge that we're seeing, it's obviously a great number. You know, the increase was pretty sizable, but, you know, there's a lot of things going into that. Last year in July, volumes were down around 25%. So, you know, you have a much easier comparisons. You know, that's not to say that there's nothing to be seen here. There's definitely, you know, good demand. A lot of that demand is coming from seasonality returning. Since the pandemic, we haven't seen normal seasonality, and we're beginning to see that. And some of that is being driven by the fact that the destocking cycle appears to be done, and retailers are looking to, you know, refill those inventory levels and get ready for back to school and obviously the holiday season in the fourth quarter.
Lee, let's go there. Is this really just a matter of seasonality, or is this stockpiling ahead of any kind of policy shift next year?
Yeah, it's a great point. You know, what we've seen, you know, recently is there's a lot of labor issues going around in North America. In Canada, the Teamsters that work on the railroads might be striking striking, or, you know, the rails are actually, you know, closing up their networks or winding down their networks ahead of a strike this Thursday. And then you have the port workers in the Gulf Coast and the East Coast. You know, their contract ends at the end of September, and there doesn't seem to be an agreement yet. Hopefully that will happen soon. And what happens is a lot of shippers, because they know about, you know, these contracts when they're coming due, is these labor contracts, is that they'll move freight maybe from the East Coast to the West Coast, or maybe from Western Canada to the Western United States. So, you know, you are seeing a movement. And also during the pandemic, as I mentioned earlier, there was a huge queue at the ports in Southern California, and the East Coast ports won a lot of share because of that, because they had a significant amount of capacity that wasn't being used. And what we're seeing now is maybe a shift back to the West Coast, and that can be driven by a lot of things. Some of that has to do with what's going on in the Red Sea. You know, before it made more sense to go through the Suez Canal. Now you can't go through the Suez Canal because of geopolitical risks from the Houthi rebels. So now they're going, you know, maybe they're trying to go back to a Trans-Pacific rate. And we've seen that in those Trans-Pacific rates, which are up around 170% from last year. So there's a lot of things going on. You have easier comps, you have seasonality, you have labor issues, and you have the destocking cycle that appears to be over.
Just phenomenal numbers coming out of those ports. Lee, appreciate the updates, sir. Lee Klasko there of Bloomberg Intelligence. Let's get you some stories elsewhere with the Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. The Democratic Republic of Congo is expecting Mpox vaccines from the U.S. as soon as next week. The Central African nation's health ministry said this outbreak has infected more than 16,700 people and caused 570 deaths. The U.S. pledged 50,000 vaccine doses earlier this month. Gold is climbing again this morning to trade at yet another record high at more than $2,500 an ounce. The precious metal has surged more than 20% so far this year, helped by expectations of rate cuts, geopolitical concerns, and central banks buying up gold. UBS said it expects the price to hit $2,700 by mid-2025 on the Fed's shift, central bank buying, and demand for portfolio hedges. Donald Trump reportedly says he would consider getting rid of a $7,500 tax credit for EV purchases if he's elected. In an interview with Reuters, the former president also said he would think about giving Elon Musk a cabinet position. Trump called the Tesla CEO a, quote, brilliant guy. And that's your Bloomberg Brief. John.
Danny, thank you. Up next on the program, the Harris policy pitch.
As president, I will be laser focused on creating opportunities for the middle class. Together, we will build what I call an opportunity economy.
And we'll talk about that next on the program. Live from New York, you're watching Bloomberg TV. Stocks on the S&P 500 still doing okay. We're positive by 0.1%. Quite a run so far already. The longest daily winning streak of the year so far. Through Monday into Tuesday. Can we make it day 9 after day 8 of gains in yesterday's session? Under surveillance this morning, the Harris policy pitch.
For too many people, no matter how much they work, it feels so hard to just be able to get ahead. As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy.
It's the latest. Vice President Kamala Harris looking to rebrand Bidenomics as she develops her own economic policy, zeroing in on the middle class. She's pledging to expand caps on prescription drug costs, revamp child tax credits, and eliminate price gouging. Mike Pyle, a former Biden administration Deputy National Security Advisor for International Economics, is currently an economic advisor for Kamala Harris and joins us now. Mike, it's good to see you, sir.
Great to be here.
BlackRock also worked in the Vice President's office, so you're an experienced guy to ask this first question too. There are already some laws around price gouging, particularly at the state level across this country. What would a Harris administration look to achieve that we don't already have?
Yeah, so I think you're right to point to those state laws. I think if you look at the principles that the vice president's thinking about when she thinks about it in an action like this, there are a few. One, this has got to be focused on the food and grocery industry. Two, this is really about emergencies. This is about very acute moments of dislocation, like after a hurricane or natural disaster. Three, going to build off of those state laws. There are 40 state laws on the books that go to price gouging in emergency situations. Red and blue states alike, that's going to be a model for her. She's also really focused on bad actors, nefarious actions. This is not price controls. There is no preset price metric or other kind of quantitative target she's looking at. It's really bad action. And lastly, she recognizes that the food industry in general is one that needs more competition, and she's going to work hard to spur small providers, both of food and groceries, to really work on that competition overall.
Let's unpack some of that piece by piece. We can get into the industry in just a moment. I want to talk about the word emergency and how you defined it. Would you define the pandemic as an emergency? And at what point did the pandemic start? And at what point did it end? Because I'm just trying to work out how this rule might be applied, how people might define things going forward.
Yeah, I mean, I think that the type of emergency that we have in mind is much more like an acute natural disaster. I think much more like hurricane, earthquake, a very acute dislocation. Obviously, the pandemic at some level was everything for 2 or 3 years. That's very different than a very acute dislocation on the back of a natural disaster.
Do you or the vice president right now see companies that are price gouging?
So, yeah, I think, like I said, I don't really think there are emergency conditions out there. So I think it's very hard to say that this is anything that would apply in the here and now. I think she does look at the food and grocery industry writ large, sees one that in particular places has a good deal of concentration. And I think as a result is really focused on spurring competition more broadly, including, like I said, with small providers, both on the agriculture and grocery side. If we can spur more competition, spur more supply, that's going to lead to lower prices for consumers, but that's different than going after bad actors in the course of an emergency.
Speaking of competition, there's a debate within the Democratic Party, especially the donor class and the progressives, about this exact thing, competition, antitrust, and whether or not Lena Khan should still be the head of the FTC under a Harris administration. Where is Kamala Harris, the vice president, on that right now?
So where the vice president is focused over the next 78 days on unifying the Democratic Party and beating Donald Trump. That is her core focus. I think, she, alongside the president, over the last 3.5 years, has built a governing record across a whole range of issues. She's proud of that record, but right now her focus is on prosecuting the case for the next 78 days.
Let's talk about the record. You briefed her every day as her economic advisor when she was vice president before you moved to the West Wing. At one point when she was running to be president in the primary, she was against fracking. Now she says she's not. Healthcare at one point, she's supported to eliminate private health insurance. She says she's not. Do you know which Kamala Harris we are going to get if she becomes president?
Again, I would say she has built a 3.5-year governing track record with the president. If you look at issue after issue after issue, she and the president have made choices to advance the interests of the middle class, to advance the interests of working people in this country. I'd say, look at the record she's built as vice president, sitting in office for the last 3.5 years. That's the starting point for how you should think about how the vice president would govern when she's president.
There's a question about the feasibility of some of the proposals. I'm thinking in particular about the housing market and the $25,000 subsidies for people to be able to make a down payment, as well as adding 3 million homes. A question of whether you can do that in such a way that giving money to people for down payments won't just prop up prices and lead to less affordability. How do you sort of square that circle?
Yeah, I think the most important thing that you heard the vice president talk about with respect to housing affordability is saying, we've got a crisis of building in this country. We've got to get more units built. We need to be ambitious with respect to what we're going to target in terms of eliminating that affordable housing construction gap. And we're going to work with builders and developers across the country to get units built. We're going to work with state and local governments to knock down barriers to construction to get units built. That is the center of her vision. She also recognizes that as we do that, it takes time to get traction. It takes time to get momentum. It takes time to get things built. And in the meantime, people are still suffering, are still feeling that pinch of housing affordability. And something like a buyer's credit can make a difference for households struggling to reach the middle class in the meantime while supply ramps up.
I guess that one question that people have is what we saw during the pandemic was that some of the subsidies, some of the money that was sent to people was done before some of the products were brought online, which is part of the reason why we saw the surge in inflation. How do you sort of get ahead of that type of response, given that we've seen the difficulty in building homes consistently, the red tape, et cetera? It just takes time, not to mention the lumber costs, as well as getting enough people to build the homes.
Yeah, again, I think that's why it was so important that you heard the vice president putting the supply story at the beginning of the story of housing affordability. I think she's laser focused on recognizing there are barriers across this country, blue states and red states alike, to getting things built. And whether it's new initiatives to help builders and developers work alongside the federal government to get things built, whether that's working with state and local governments to punch through red tape, that's going to be her focus because she recognizes that's the key to affordability, and it's going to take time and focused energy to get that done.
Just to stay on Lisa's line of questioning, ultimately there's a duration mismatch here between how quickly you can stimulate demand and how quickly you can address supply. Will we just have to tolerate higher prices in the meantime? Is that basically what we're going to see? Isn't that the outcome of all of this?
So, I think that, these things are meant to work in parallel with one another, that supply is going to ramp up. We're going to get traction. There's going to be a lot of focus there. At the same time, there's a crisis today. Working and middle class families need support today. And the vice president's proposed a way to do exactly that.
Can we talk about taxes?
Sure.
What's a good corporate tax rate for this country?
I think you saw the vice president embrace the Biden-Harris proposal. 28% is the proposal that the vice president supported alongside what she and the president have already proposed.
So we move up to 28. Is she in line with Biden as well on what he would have done with the taxes that are set to expire, the tax cuts that expire in 2025?
Yeah, I think that if you look at the Biden-Harris budget, you see a range of tax proposals, you see a range of investments, you see a range of principles around how the TCJA expiration should be handled, and that's something that, as a governing partner to the president, the vice president has embraced.
Is the deficit an ongoing concern for you and the team?
I mean, I think you heard from the vice president herself on Friday when she gave her speech. She pointed to the fact that when you look at the Trump campaign playbook, it's extending and deepening tax cuts for corporations and the wealthiest. It is not fully offsetting those with a set of sales taxes on imported goods that will hurt working families. And as a result, that's going to increase and blow up the deficit. On the flip side, if you look at the Biden-Harris budget, there is net deficit reduction alongside the investments in the middle class. And she, continues to believe that deficit reduction needs to be an important part of the pitch.
We've run out of time and we've only scratched the surface. Do you think that the vice president would sit down with Bloomberg TV and actually have a conversation about the economy? Because we'd like to make that happen.
I think that the vice president looks to go meet voters wherever she can meet them. And there's a lot of constraints on her time over the next 78 days, but she wants to go where the voters are.
Got to make one interview happen, Mike. Come on. Mike Pyle, economic advisor to Vice President Kamala Harris. Coming up on the program in the next hour, Tracie McMillion of Wells Fargo, former US Senator Doug Jones, Neil Dutta of Renmag, and Ed Al-Hussainy of Columbia Threadneedle from New York City. You're watching Bloomberg TV.
The inflation, Jeannie, I would say, has not been completely slayed.
It's the data that's driving the market's reassessment of how many rate cuts need to be done this year.
There's no doubt the Fed will go in September.
The idea of getting an extra even 30 to 40 basis points priced in, I think that's really a tough thing to ask for.
Those who are thinking that this rate cut is going to change Main Street are overestimating the power of 50 basis points on the street.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
What a rally we've seen in this equity market over the previous 8 days on the S&P 500. It's a rally that continues 90 minutes away from the opening bell. The third hour of Bloomberg Surveillance begins right now. Equity futures on the S&P 500 positive by 0.1%. On the Nasdaq, a little lift as well, up by 0.1%. Another read on the consumer this morning, this time from Lowe's. Home improvement, a real struggle. We saw it from Home Depot as well. If you park the weakness and just focus on the strength, retail sales, that's where a lot of people in this market have taken comfort from in the last week, Lisa, and it's contributed to quite an equity market rally.
They've shrugged off questions around the housing market as idiosyncratic and pointed to the fact that with Walmart, we saw a consumer showing no signs of fraying. We saw a consumer very much continuing to spend. And frankly, we're seeing that out of a lot of the travel companies as well. Key question will be, will the Fed cooperate? We heard that from Bob Michael, that the key ingredient was a Fed that started to cut interest rates with this spigot of cash in money market funds that he saw potentially unleashed into the rest of the asset market.
Macroeconomic environment seems to be weighing on the likes of Home Depot and Lowe's, with these customers saying they're deferring these big projects, the decks that Lisa wants to enact and build out herself, do it yourself. What I have a question for is, what if some of these policies we're hearing from the Harris campaign, and now Trump basically saying, I don't like the idea, but maybe I'll do it, $25,000 going to you if you can, to help you buy your first home. What would that do if that actually happened to a place like Lowe's or to a place like Home Depot?
We heard from Mike Pyle, economic advisor to Kamala Harris, the vice president, just moments ago on this program. And you got a sense for where they see policy. He wanted to keep talking about supply. And we kept coming back with the question, it takes a whole lot longer to solve the supply issue than it does to incentivize demand. Demand you can incentivize just like that, straight away, immediately. The supply side story. When you have a duration mismatch like that, it is the ultimate policy dilemma. In the meantime, you just have to accept it's probably going to contribute to higher prices.
Which I like that you kept going back to it, and there wasn't really a satisfying response, just simply because it takes longer to build a home than to give somebody cash, period, full stop. And we've seen this movie before. Key question is going to be, how much is this sort of sending a signal versus actual policy that actually can get enacted with any kind of real time frame? How much is this going to be something that you're going to kind of message to state leaders rather than actually passing a $25,000 bonus, or actually enact some kind of price gouging mechanism for emergencies?
A lot of this is rhetoric. It polls well, not exactly going to be reality. Price gouging was very interesting. We saw a big difference in terms of what has been marketed from Harris when she's out there talking about it, going after corporations, the cost of living crisis. The blame is not us. The blame is on these corporations. Mike Pyle couldn't really pinpoint a company that he sees as price gouging right now. And what he said is this is going to be in emergencies. Talked about hurricanes. You asked a great point, Jonathan. Does the pandemic count as an emergency? That's when this idea of price gouging came about.
Will they say the climate situation is an emergency? This is where things can get pretty dicey when they're open to interpretation, but my takeaway was just the same as yours. This was a serious walk back compared to what was leaked just last week, and it sounds a lot like what is already on the books at the state level across this country.
Which is the reason why you get the likes of Michael Zezas over at Morgan Stanley saying don't expect a lot of policy out of the Democratic National Convention, or frankly, much going into the election, because it's very hard to know what to take seriously and what not to, what can actually get enacted, et cetera. Bottom line is a lot of people are looking at post-election, what actually does get enacted, and how that factors into the deficit. You talk about gold, for example, at a new record high. How much does this sort of relate to some of the deficit concerns at a time when people don't have clarity on that being the one real kind of ramification that people can pinpoint?
Yeah, I think regardless who wins, you're going to see a lot more spending in this country.
Exactly.
And that's probably not going to change anytime soon. Equity futures right now in the S&P, if you are just joining us, your scores look like this. We're positive again. We're coming off the back of an 8-day winning streak, and we're looking to make it day 9. As we've repeated throughout this morning, if you make it 9 days of gains on the S&P 500, it's the longest daily winning streak on the S&P going back 20 years. In the bond market, the 10-year 3.8673. In foreign exchange, the euro going absolutely nowhere. 110.83. Coming up this hour, we'll catch up with Tracie McMillion of Wells Fargo as the S&P 500 continues its winning streak. Former Alabama Senator Doug Jones as D.C. anticipates what a Harris cabinet might look like, and Neil Dutta of Renmac on why the Powell put could make a comeback at Jackson Hole. We begin with our top story. Stocks rallying for the 8th day in a row, their longest winning streak of the year so far. Tracie McMillion of Wells Fargo looking for the Fed to validate the enthusiasm, writing the following: don't get too hung up on 25 versus 50 next month. The important thing is that cuts begin. We expect a total of 100 basis points of cuts this year and another 3 25 basis point cuts in 2025. Tracie joins us now for more. Tracie, before we get to the Fed call, I want to start with your market call. Get out of bonds, get into stocks, both small and large. Tracie, what's behind that?
Good morning. So what's behind that really is the shift that we're seeing, the pivot, if you will, now to lower rates. We do expect the Federal Reserve to cut in September, whether it's 25, whether it's 50, we do expect that cut. And so now we think it's time to move some of the cash out of short-term fixed income. We've been using that as a parking spot for the better part of 2 years. Now it's time to move some out and broaden exposure to equities. Lower rates we see, and we also see a recovery and growth in 2025, and it's that combination that we think is going to help smaller companies. And we're also adding to large caps. That's been a favorite of ours for 2 years as well.
What do you say to the bond strategists that come on this program, Tracie, and say you should take some of that money from the front end and just take it out further to the long end and stay in the bond market?
Yeah, so actually we're doing that too in diversified portfolios. Most of our portfolios hold both fixed income and equities, commodities, alternatives, so diversified portfolios. And within a diversified portfolio, we are now overweighting equities slightly, and we are underweighting bonds slightly. But within bonds, we're also saying that we want our investors to move from the long end towards intermediate and the short end towards intermediate. So we're underweighting kind of both of the tails of the yield curve, and we're bulleting that intermediate space.
Can you explain why that is? We just had Bob Michael of JP Morgan on, and he was talking about a potential 3% handle on the 10-year yield. As so much cash, the more than $6 trillion in money market funds, floods into longer duration bonds. Why do you not see that as that feasible?
Yeah, so we think that as some of that cash moves back into the markets, it will move not only into fixed income, but also into equities and other assets. Some of it will stay. If rates are where we expect them to be the Fed's rate is where we expect it to be next year, then we think that some of that cash is just going to stay in cash. We think that the 10-year is probably going to be closer to 4% than 3% in 2025. So we see that as an opportunity to continue to hold bonds that are paying in the 4% range, but also moving some of those assets into equities.
You know, Tracie, you hinted at sort of a dynamic that's been a big debate on this show and beyond. How much of that more than $6 trillion in money markets actually is going to look elsewhere as rates come down? How sticky is it versus just being parked ready for asset prices to have a clear direction? How much do you think that either half or a quarter is set to move out into, say, stocks and intermediate bonds versus just be an alternative to bank accounts?
Yeah, we think that a lot of those cash assets are exactly what you said, money that is moved out of deposit accounts into money market funds because of the higher rate. So we don't expect, the majority of those assets to move into risk assets or out the curve to longer duration bonds, because most of it is going to be assets that people want to continue to hold short term in cash for nearer term financial objectives.
Just want to finish on your Fed call, Tracie. Just go through those numbers. I promised you we'd come back to this. So here we are. We expect a total of 100 basis points of cuts this year. You say don't get too hung up on 25 versus 50, but based on how many meetings we have left this year, are you expecting 50 at one of these meetings?
So right now we are expecting 50 at the September meeting and then 25 at the other two meetings for the remainder of the year. But really that's going to hinge on August's employment numbers. So we don't think the Fed is going to give us any indication on Friday whether they're going to go 25 or go 50. But the important thing is that they are still planning to cut. And that is what markets are kind of hanging their hat on right now.
Tracie, do you think that if they did cut by 50 basis points in response to a weaker non-farm payrolls print, that would be good for risk assets or bad for them?
Yeah, so if they cut 50 basis points because of a weaker print, that is going to probably signal to markets that the economy is a bit weaker than the Federal Reserve had anticipated originally. So that's likely to add some choppiness back into markets. But we would say that any volatility in markets is a good entry point to purchase more large cap stocks and to build up that small cap position back to a long-term neutral weighting.
Tracie, appreciate the input this morning. Thank you. Tracie McMillion there of Wells Fargo. Just finishing up there on that call for the Federal Reserve. Looking for 50 potentially in September on the 18th. But all of that hinges on what happens on September 6th in the payrolls report. So sneak peek of September 6th for you. There's only 4 estimates so far in our survey, but I can give you the median. It's 155,000, which would be a move up from the 114 we printed a few Fridays ago, Lisa. 155 the estimate at the moment. And of course, that's going to change in the next couple of weeks.
You know, it's going to be very exciting, not just on September 6th, but tomorrow we actually get the revisions to earlier estimates for the jobs figures going through March for the full year. I want to see how many jobs were actually revised lower, and then we'll start talking about how to sort of understand the trajectory of some of these numbers. I do think that there is more at play than just September 6th, but that is clearly the hallmark moment.
Just how much growth we've had and what's normal
exactly
in this world, and what kind of numbers should we be looking for in the next couple of months. Let's get you an update on stories elsewhere with an update with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Hamas says that it is keen on reaching a ceasefire agreement with Israel. In a statement posted on Telegram, Hamas denied what it said was U.S. claims that it's backing away from the negotiations. The Iran-backed Palestinian group said the recent draft deal was different from what was originally proposed by President Biden in May. The U.S. has called this one a bridging agreement and said that Israel has accepted the proposal. Donald Trump is downplaying criticism that he has undercut the Fed's autonomy. In an interview with Bloomberg News yesterday, the former president said he thinks it's fine for a president to talk, and it doesn't mean they have to listen. Trump also called Harris's plan to offer first-time homebuyers $25,000 a, quote, big mistake, but then went on to say that he might also offer help to struggling prospective homebuyers. Alaska Air and Hawaiian Holdings are now closer to finalizing their $1.9 billion merger. The waiting period for the Justice Department's antitrust review has now expired. The deal is still subject to approval from the Department of Transportation, which can impose conditions to ensure the deal serves customers. And that's your Bloomberg Brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the programme, the morning calls, plus former Alabama Senator Doug Jones as D.C. tries to identify potential Harris cabinet picks. That conversation up next. You're watching Bloomberg Surveillance. Getting you set up for the trading day, counting you down to the opening bell, about 1 hour and 14 minutes away. Going into that, the scores look like this. Equity futures on the S&P positive by another 1/10 of 1%. Let's get you some morning calls. First up, Evercore raising its price target on Palo Alto Networks to $3.95 and removing the cybersecurity firm from its tactical underperform list. The firm highlighting better than expected earnings. That stock is up by 2.2%. Next up, Baird raising its price target on Chewy to 32, keeping an outperform rating. The firm seeing active customer numbers stabilizing and potentially growing into next year. Slightly positive in the pre-market there. In early trading, higher by almost 0.7%. And finally, UBS lowering its price target on Estée Lauder to 104, maintaining a neutral rating. The analyst noting that both top and bottom line recovery is taking longer than hoped for, even with strong fourth quarter results. That stock is just about higher by about 1/3 of 1%. Let's turn to politics. A possible Harris administration will likely recruit cabinet members from D.C.'s rank and file. Axios reporting that former Alabama Senator Doug Jones is on the short list for Attorney General, a position he was floated for when President Biden was building his administration. Doug Jones joins us now for more. Senator, wonderful to have you with us on the program, sir. Thank you. We're all looking ahead to the rest of this week with the DNC in Chicago taking center stage. I'll start there, Senator. What would you like the focus to be this week for your party?
Well, I think we're continuing to focus on the future and not going backwards. We're going to focus on those things that Democrats have accomplished over the last 3.5, almost 4 years now. Jobs, the economy, things moving forward, getting inflation under control, bringing NATO strong and our alliances together to fend off Putin and Russia and strengthen democracies around the world. We're going to continue to look forward. And what we're going to continue to also do is to be, as Tim Walz says, joyous and unified. This is something you really haven't seen in the country for a while. But Kamala Harris and Tim Walz are bringing this country together, and we're going to continue to build on that and build that momentum as we go into November.
Senator, when you look at the polls, the top issue remains the economy. And then when you look under the hood, even if Kamala Harris is starting to tighten the polls, especially in swing states, most voters say they trust the Trump administration when it comes to handling of the economy. How does Kamala Harris put some distance between her and the current president, who they blame for things like high inflation?
Well, you know, I'm not really sure she has to put distance between herself and the current administration. Most recent polls are showing that people believe Kamala Harris would do better on the economy than Donald Trump. At least that's polls that I have seen. And they're all the same polls that have been doing this for years. So I also think that, and I've said before, her nomination gives the Democrats and America a reset button, an opportunity to look. And that includes not just looking at going forward and the messages that she will do in her administration, but let's look what has happened, a reset button through different lens. For 3.5 years, Donald Trump has absolutely demonized Joe Biden. And so many people in this country have seen the administration's successes through those eyes. Now they've got a reset. Now they can look at a different way, and the same messages are getting out there. You were talking about your numbers in the prior segment just now. So I think that people are going to start focusing in on exactly what's happening, and they're going to be looking, and they're going to look and determine, are you better off than you were 4 years ago? And the fact is, we are better off. Inflation may still be a little bit high, but it has come down. But people are working. The income gap has narrowed. People have jobs. Manufacturing jobs are coming to this country, and we've strengthened our ties around the world. I think the United States of America, with all its bumps in the road, is so much better off today than it was coming out of a Trump administration with COVID and joblessness and the problems that were had and January 6th and all the divisions and chaos that he created.
Senator, let's talk about this potential reset maybe on the horizon for you. The Justice Department right now is under fire from Trump and allies because they say it is politically motivated. If you were to take on this position, you are being floated to be the Attorney General. How would you ameliorate those concerns and potentially bridge those divisions and bring the country together?
Well, look, I'm not going to talk about any potential Harris cabinet. That is so far down the road right now. We've got to focus on winning this election. I think people ought to look at what Donald Trump would actually do to the Department of Justice. Look at Project 2025. Talk about weaponizing the Department of Justice, taking away career individuals and putting in place those who will do the president's bidding and not just policy matters, but doing the president's bidding, saying that they would go after whoever they can. If you read Project 2025, it's a frightening prospect on what's going on. I think that's the contrast right now. The next cabinet, the next administration has got a lot of work to do with the American people because Donald Trump and his MAGA movement have so infected the American psyche these days about what is about norms and about our institutions of government. There will have to be a lot of rework.
Doug, there's a question about what's rhetoric and what's actually policy. And I think that that's true with the Trump campaign, and I think it's true with the Harris campaign. There's a question about what price gouging and going after it actually means. We were just speaking with an economic advisor to her talking about in emergencies, which isn't exactly what's coming across. We hear about $25,000 for people to buy homes. Hard to see how that's going to really get through. How do you understand what could actually get through? Is this just basically that the tax rate's going to increase on corporations and that there will be a greater focus on just what can be done elsewhere going forward in an ambiguous fashion?
Yeah, you got to remember that there is a Congress. A president of the United States cannot do everything by executive action. It is a problem that we've got, and it is going to be a closely divided Congress, no matter which way the Senate or the House goes. That's one of the things I believe Harris and Biden administration can do.
At this
pull
point,
people together.
At this point, there are a lot of companies that are waiting for some sort of clarity in Washington, D.C. before engaging in certain projects that could be expansionary and provide new jobs, but they're unclear about whether they can merge, whether that will be allowed, the whole Lena Khan question, but also in terms of what the parameters are going to be with regulations. How consistent will Kamala Harris's policies be should she be elected to President Biden? Is this basically continuation of exactly the same?
No, I don't think it will be basically a continuation. Look, it's a process. She's going to have to be the president for herself. She will have her economic advisors. They will come in there. She will start addressing more, I think, after this convention, the specifics of everything that she wants to do, and let the people judge. I mean, the people is going to be this jury. But I don't think right now you can say one thing or another what specifically she will do. That is going to be a work in progress. She's got to deal with a Congress. She doesn't want to have to do everything by executive action. That's been one of the problems that we have seen so far. One president comes in and has to undo the actions of another, or wants to undo the actions of another. What I'd like to see her accomplish after she is elected, and in that period that before she is sworn in and in the 100 days after, is to work with the members of Congress on both sides of the aisle. But you know what? That takes good faith on both sides of the aisle. It's not going to be possible to get anything done if the opposing party simply wants to put up a roadblock. So she's got that opportunity. I think with Tim Walz as her vice president, a very, very well-liked member of the House of Representatives for a number of years, I think she's got an opportunity in Tim Walz to really be active with the Congress to try to move legislation forward.
Senator, very quickly, do you still maintain ties with Republicans on the upper chamber?
Well, I talk to them when I get up there. I see them. We're still friendly. I have a lot of respect for a number of my colleagues that were up there. So many of them worked well with me on any number of pieces of legislation. That's exactly the same kind of spirit I hope that they will give Kamala Harris when she's elected, and whoever works with her on the legislative process.
Senator, appreciate your time today. The former Alabama senator there. Doug Jones. Project 2025 comes up all the time. How many people have read Project 2025? It's a 900-page policy book from the Heritage Foundation, which Trump has now repeatedly distanced himself from, but we keep hearing it repeatedly.
I read the spark notes of it. The issue with Project 2025 is a lot of the people that drafted it either worked for Trump or very close to Trump, which is why the Democrats continue to say that this is something that is potentially going to be an envisioning of Trump 2.0, even though Trump comes out and says this has nothing to do with us and tries to put a lot of distance between it.
Keep beating the same drum, don't we, repeatedly?
Look, on one hand, you've got Trump saying that Kamala is a socialist, she's a communist, she's going to come in, and then you've got the Harris camp talking about Trump and Project 2025, and he's going to, throw government out.
You're enjoying this, aren't you?
I'm loving this.
Yeah, every second. The opening bell is up in about an hour and 5 minutes' time. So we'll talk about markets and the economy up next with Neil Dutta of Renmag and Ed Al-Hussainy of Columbia Threadneedle from New York. This is Bloomberg. 60 minutes away from the opening bell. Equity futures on the S&P 500 still just about positive. Likewise on the Nasdaq and the Russell 2 on the small caps are up by 0.06%. We've said it a few times this morning already. It's worth repeating. The equal weight S&P 500 is at a record high coming into Tuesday morning. If you switch up the board and turn to the bond market, your yields look like this on a 2-year, 10-year and 30-year. We pulled down across the curve a little bit more at the front end of the curve. So the curve steepened with a move of about 3 basis points lower on a 2-year to 4.0382%. Worth repeating also, we're light on economic data this week. The next big stop is jobless claims on Thursday. We're light on Fed speak as well. But if you want to read of the US consumer, there's a few more stopping points over the next 24 hours or so. TJ Maxx is one, Target is another. Lisa, just giving us a little bit more of an offering about what's happening with the US consumer at the moment.
And if it mimics anything we saw out of Walmart and others, it will be that the consumer is still spending, albeit the big companies tend to be accepting a bigger proportion of the dollars. I also think Thursday is important for jobless claims. How much they also confirm what we saw last week, which was they actually went lower. This sort of panacea type of data where you get a jobs market that still looks strong, even with ongoing disinflation.
Claims for Thursday, the estimates so far 232, so in and around last week's number of 227. We'll see what we get on Thursday, but certainly to Lisa's point, over the last few weeks, the drama of a few weeks ago, we kind of pour some cold water on it. Claims come back in. We've seen a couple of head fakes around jobless claims over the last year. In fact, last summer, same thing. Claims started to gap higher, same concerns. Claims come back in. Payrolls revisions, and you've mentioned this already this morning, tomorrow, really, really important. You know, we move so much on any given payrolls Friday, and then we kind of forget about the revisions that we're going to get further down the road, and we could see some big ones to these.
I mean, if you think about right when we were recovering from the pandemic, the revisions made it look a lot better than the initial numbers suggested about the labor market. And had those numbers been coming out at the time, the Fed would have acted differently. They probably would have hiked rates sooner. At this point, people are expecting about 1 million jobs to be taken off the total for the year ended in March. Does that move the dial? Probably not, because that's sort of the expectation. At what point do people really start to see a very different dynamic in terms of the total labor pool, as well as how much momentum we have coming into September 6th?
That will give Chairman Powell a little bit more clarity when he delivers his address in Jackson Hole, Wyoming, this Friday at 10 a.m. Eastern Time. There's another central bank in focus as well. It's the BOJ, with the prospect of further rate hikes, not cuts, rate hikes at the BOJ further on down the road. With dollar yen at the moment at 146.30, just a little bit more of yen strength, Lisa. This story continues, and dollar weakness over the last 4 weeks. We could have a 5th consecutive week of dollar weakness.
This is pretty much a perfect recipe right now for the Bank of Japan officials. You have data that confirms rate cuts in the United States along with ongoing global strength. At the same time, they did give that hike just recently, as well as research that came out overnight suggesting that they still are seeing inflationary pressures under the surface, particularly when it comes to wages. This is not written by Bank of Japan officials. They had those disclaimers, but nonetheless, the trajectory does seem to be higher, and they don't seem to be moving away from that type of tenor.
Dollar yen at 146.30. Under surveillance this morning, some top stories for you. Alaska Air and Hawaiian Holdings are one step closer to finalizing their $1.9 billion merger. The DOJ deciding not to challenge the deal, but the airlines still need approval from the Department of Transportation. Elsewhere, the proposed takeover of U.S. Steel by Japan's Nippon Steel is back in the bipartisan crosshairs crosshairs. GOP nominee Donald Trump and Democratic Pennsylvania Governor Josh Shapiro both reiterating their opposition to the deal. Trump saying he will stop it if he's re-elected. And Anne-Marie, this is a political potato, and no one wants to be a political potato, but US Steel is exactly that.
It is exactly that. I would say to the individuals trying to get this done during an election year was not a good idea, because this comes down to potentially winning Pennsylvania and making sure you get the rank and file union votes to come out and vote for you. The name that we don't have yet, the Harris campaign, declined to comment on her position so far when it comes to this. But I imagine she's going to lean towards Governor Shapiro and Donald Trump as well. This is not happening in an election year.
You'd have to imagine she gets in line with all the rest. This is an extremely hot political potato. Donald Trump now saying he would consider ending a $7,500 tax credit for electric vehicle purchases, telling Reuters he thinks tax incentives are, quote, not generally a very good thing. Trump also saying he's open to naming Tesla CEO Elon Musk to a cabinet or advisory role. Now, on the surface of things, this sounds kind of bizarre, right? He's set to get rid of something that's actually benefited one of these companies, and the CEO of one of these companies would actually go on to work in a cabinet.
Well, I found it so interesting when they sat down for their X conversation. It felt like more Musk was trying to ingratiate himself with the MAGA world, saying we cannot demonize the EV world. We cannot demonize this idea of sustainability. And then Musk actually said, also, I think there should potentially be, more business leaders having a say in government. Secretary Musk, potentially, under Trump 2.0. I don't know.
What's the role, exactly? Government efficiency, is that what it is? The Secretary of Government Efficiency.
I think Jamie Dimon also sort of pitched this idea in that Washington Post opinion piece, that there should be a cabinet position specifically for a business leader.
Honestly, I'm just, again, okay, fair enough. I'm sitting here kind of at a loss, because how do you take any of this stuff seriously? In a passing conversation, he talks about, some of these incentives as being a bad thing, and then he says, but I'll put them in. Question that I have is, who has his ear? Right? And what is sort of the goal of the people who have his ear? And there's a real question about Elon Musk having his ear. Does that mean that he's going to be more amenable to some of these, I don't even say incentives, but a more EV-friendly type of regime? It's an open question. I've heard some things that are saying yes, some things that are no. But the reality is we're not getting actual policy debates right now, because no one's willing to actually have that. I mean, even with Nippon Steel, they're making their pitch to the labor market, to the labor union, and that's going to be some sort of, sweeten the pot. And basically, politicians are going to be just basically weighing in to try to cater to a certain demographic.
Would you like to park this story? We can park this story now and move on. Let's bring in Neil Dutta of Renmac. Neil, wonderful to catch up with you, sir. We're not going to talk about politics, don't worry. I want to talk about something far more interesting. Revisions to the SEP in September, I don't think have been talked about nearly enough. You mentioned them in some recent research. Neil, how drastic will those revisions be in September versus where we were back in June, which feels like a lifetime ago?
It's a good question. I do think that, right now it looks like GDP is running a little bit above their estimates, but obviously the most notable revision is probably going to be the unemployment rate, right? Because the unemployment rate currently stands at 4.3%. That's well above where they thought it would be. It's actually somewhat higher than they thought it would be at the end of 2025. And I think that's really what's interesting to me, John, is if you look at their 2025, estimates, they have the unemployment rate, I think, at 4.2%, core inflation at 2.3%, and the federal funds rate at 4.1%. So if you think about that, we're already above their unemployment rate estimate. Over the last 3 months, core PC has been 2.3. When the latest data comes out, it's going to be on a 3-month basis below 2%. And yet the Fed funds rate is, basically at 5.5%. So it's kind of like, which of these is not like the other? That's why I say we should expect a relatively, abrupt kind of about face in terms of these revisions. And if we don't get that, I think, there's a risk of increasing concern that the Fed may be a little behind here.
You touched on the recent data, Neil. We've had a few guests on the programme taking some encouragement from the data of the last week, particularly retail sales. You called that the exception and maybe not the rule. Why do you think that is the exception? Why do you think we can disregard what we heard last week?
Well, it's just a fact. I mean, think about all the hard data that's been released for July. It started with a bad employment report. we had weak housing data, we had weak industrial production data, we had a good retail sales report. Okay, so I think standard business economics, obviously the employment number is going to get the most weight, and then the other indicators are all secondary. So I think it's sort of important to not kind of get carried away with retail sales, and you have to have a fundamental kind of framework for why. I mean, why would consumer spending be taking off? I mean, if you take all the data at face value, John, it basically means that in July we had an unsustainable decline in the savings rate. So it's probable that the savings rate perks back up, and you see consumer spending cooling. And then, obviously there's some interesting kind of details under the surface, right? I mean, I pointed this out to our clients, but if you look at building material store sales, I mean, we see what Lowe said today. We see what Home Depot said. They're talking about sales being down 5% sequentially, yet you look at the census data on building material store sales, and it's up 5% year over year. So it's sort of, I do think that the retail sales number probably overstates things somewhat. Doesn't mean the consumer's falling apart, but it's unlikely that it's sustaining at a 3% real pace.
In some ways, Neil, it seems like the market is pretty much on the same page as you are. They're expecting the Fed to cut by more than 25 basis points come September, 32 basis points right now priced into Fed funds futures, 100 basis points by year end, even with an economy that does remain resilient, ongoing, maybe despite some of the weakness that we're seeing on the margins. I mean, isn't that basically what you're saying?
Well, I think there's probably a little bit more downside risk in the economy than the markets may appreciate at the moment. I mean, to me, I think that the housing market is slowing. I mean, if you look at single family starts, permits, new home sales, transactions, I mean, they're all very, very weak. And, we do know that construction employment has been a notable sort of, upside surprise factor, you could say, for employment. And I do wonder how long that lasts. And we also know that we had a fairly significant inventory build in the second quarter that probably won't persist in the second half of the year. And so I do think the slowing in goods producing industries at a time when the labor markets are slowing, that has my attention. And so I think for the Fed, if all you're going to do is string out a bunch of 25 basis point rate cuts, I mean, it could take a long time to get to neutral. And the further the Fed is away from neutral, I mean, they're very restrictive by their own admission, the more the risk to the economy builds. So, I think that's kind of the debate. It's not about whether they go in September anymore. I mean, that debate is over. When you have Neil Kashkari talking to the Wall Street Journal about a September cut, I mean, that debate is basically dead. Now it's really about how quickly they get to neutral and where neutral is. And, given the fact that they're very far from neutral, and the fact that the data on net has been somewhat weaker than expected, I do think that kind of supports larger moves at the outset.
Neil, how much do you think benchmark rates would have to go down to really support the housing market in the way that you think is necessary to keep the economy from falling much more deeply?
I mean, I think you need to see 30-year mortgage rates at, I don't know, maybe below 5.5%. I guess the issue is, why hasn't the housing market really perked up, right? I mean, if you look at 30-year fixed rate mortgages, I mean, they're basically where they were last spring, right? I mean, nominally around 6.5%-ish. I think that's the latest reading. But you haven't really seen any meaningful increase in home sales, purchase demand. And I think the reason is that when inflation's 4.5%, a 30-year mortgage at 6.5% looks okay. But when inflation's below 2%, it's not so much of a good deal. And so I think you need to see. I think you need to see a bigger decline in mortgage rates to get the housing market going.
Wouldn't you expect the housing market just to seize up now, Neil, particularly for first-time home buyers? Because I've got the prospect of getting some money from the government next year now and lower interest rates. Why on earth would I buy?
I mean, it's a good question. I don't know. I mean, I wouldn't. If I was a first-time home buyer, I wouldn't be making my decision on what DC may or may not do. That to me wouldn't go into my calculus in terms of when I would buy. I mean, I think it would really be about my employment situation and how I feel about that. And at the margin, we know that consumers feel a little bit worse about their employment situation. I mean, expectations for weaker labor markets among consumers and the surveys that we look at the margin are deteriorating. And I'd also look at, where are interest rates? That would be the calculus, not, a politician promising us manna from heaven.
Neil, appreciate it. Thank you, sir. Neil Dutta of Renmark, as always. Thank you very much. I want to turn to this quote. Here's a quote for you. Either rates will decline more rapidly to support a weakening economy, or the economy will stabilise and require fewer rate cuts than currently discounted by markets. There is an inconsistency that will need to be resolved in the coming quarters. That quote belongs to Ed Al-Hussainy of Columbia Threadneedle, and Ed joins us now for more. Ed, which outcome are you betting on at the moment?
I think Neil framed it really well. I think the economy is seeing more downside risks at the moment, and the pressures on the Fed to front load some of this easing and add a little bit of accommodation to the economy. So the first option is where I'm placing my bets.
Do you agree that we talk about housing as sort of an idiosyncratic market within the broader economy that's healthy? Neil saying that that's actually not the case. It's actually emblematic of where the issue is and where there could be some sort of bigger downside. Is that what you're looking at as well?
Yeah, it's been striking. So housing has been, historically one of the most interest rate sensitive parts of the economy. It responded very quickly when the Fed hiked rates in 2022. We saw housing capex decline. We saw housing employment, housing construction employment essentially go sideways. And so it absorbed those Fed rate hikes very quickly and exerted a brake in the economy. We also saw it start to recover in the course of last year. It stabilized. In fact, at the beginning of this year, it was a marginal net positive add to GDP. And the expectation was that essentially the housing market would become used to a higher interest rate environment, a higher for longer environment, and we would see some recovery. That expectation is not playing out. We're seeing housing, again, decelerate at the beginning of this year. And looking ahead, like Neil pointed out, the leading indicators are beginning to turn down. And that's a really important sign that there are brakes being inserted on the economy at the moment.
So, Ed, it sounds like you might be more in the Bob Michael camp than anything else, given the fact that he sees a flood of cash potentially going in longer duration bonds, not necessarily exactly the why behind it, but this idea that maybe people are underestimating how much benchmark rates have to go down in order to offset some of this weakness that you see sort of exemplified in the housing market. Is that basically the trade that you're making?
I don't know if people expect cash to flood to different parts of the market all the time. It never really plays out that way. I think the bet that we're making explicitly is that real interest rates and inflation-adjusted rates are around 2% across the curve at the moment. It's becoming clearer, I think, to me and clearer to the Fed that the economy really cannot sustain these rates without being susceptible to a slowdown. And so it makes sense to bring them down. It makes sense to bring them down closer to around 1% over the course of the next year or so. And so we're betting that the market's underappreciating how quickly that's going to move.
Ed, when you say 1%, do you mean 100 basis points or do you mean actually moving rates down to 1%?
It's about 100 basis points in terms of 10-year real yield, right, which is about 1.85 to 2% at the moment. And that's really the beginning of the process. That's assuming that the economy stabilizes. That's roughly neutral. If the economy needs significant assistance, then you could see those real interest rates go down closer to zero. And in fact, they were negative back in 2020. So we're talking about the first part of the process, bringing rates from a place where they're restrictive, they're exerting brakes in the economy to roughly flat, roughly neutral.
A lot to chew over here. Ed, appreciate it. Ed Al-Hussainy there of Columbia Threadneedle with an interesting call on the bond market. Lisa, I just wonder, what is gold sniffing out as we have all these conversations about the scale and degree of rate cuts that we need, with gold sitting close to another all-time high as I look at the screen?
I've gotten a couple of messages about this. One of them is talking about the deficit, this idea of perhaps people are looking at gold as the haven asset rather than long duration bonds because the deficit is going to remain ever present. There is this feeling, and we were hearing this over the past 2 weeks, that fixed income is where the volatility is going to be going forward, whether it's the election cycle or whether it's this question around the Fed's response function, exactly how effective their monetary policy can be in the long end when they really have control over the front end. These are some of the things, in addition to central bank buying, that have pushed a lot of people to gold.
Gold just keeps setting new all-time highs. So let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. U.S. antitrust regulators are likely to challenge Couche-Tard's bid to buy the Japanese operator of 7-Eleven. That, according to the FT, the tie-up between the Canadian operator of Circle K and Japan's 7 & I would create one of the largest retail chains in America. People familiar told the FT that regulators are concerned it would increase prices for consumers and damage the labor market. Boeing has paused test flights of its 777X jetliner after the discovery of a crack in a component that connects the plane's engine to its wings. The plane maker said it found the damage during routine maintenance following a test flight. The component didn't perform as designed, according to a company statement. It's the latest setback in Boeing's efforts to certify its largest jetliner, already 5 years behind schedule. An RBC analyst said the grounding could delay deliveries to 2026. And John, as you mentioned, gold is climbing again this morning. It is trading at yet another record high at $2,500 an ounce. The precious metal has surged more than 20% so far this year, helped by expectations of rate cuts, geopolitical concerns, and central banks buying up gold. As for where it goes from here, UBS says that it expects prices to hit $2,700 by mid-2025 on the Fed shift, central bank buying, and demand for portfolio hedges. And that's your brief, John.
Danny, thank you. Appreciate it this morning. That last point is the point that Lisa's picking up on, an important point. Next on the programme, we'll set you up for the day ahead and we'll catch up with Katie Lyons at the DNC over in Chicago from New York. This is Bloomberg TV. The open about 38 minutes away. Equities just about unchanged on the S&P 500. Let's see if we can make this rally stretch from day 8 into day 9 and maybe even beyond. Counting you down to that opening bell. Here's the trading diary, the calendar for the next few days. Earnings from Toll Brothers coming after the closing bell. We'll get more results from Target, Macy's and TJX tomorrow, plus Fed minutes at 2 p.m. Eastern Time. Thursday, another round of claims, and on Friday, Fed Chair Jay Powell delivers some remarks. Turning to the other event this week, the DNC underway in Chicago. Former President Barack Obama speaking tonight, followed by Harris's running mate Governor Tim Walz on Wednesday. And finally on Thursday, Vice President Kamala Harris will deliver her acceptance speech at the DNC in Chicago. Bloomberg's Katie Lyons joins us now for a preview of what to expect today. And Katie, interesting that we won't actually see Harris and Walz exclusively in Chicago. They'll be elsewhere as well on the campaign trail.
Yeah, they will, John. And interestingly, they're going to the literal scene of the Republican convention in Milwaukee, Wisconsin last month. They will be in prime time at the Pfizer Forum, where that convention was held just 4 weeks ago. It's happening pretty much simultaneously with the primetime speeches that will be held at the United Center here in Chicago this evening, 8 p.m. Central Time, 9 p.m. local time. And it will be interesting to see the kind of energy and crowd comparisons that appearance may draw, knowing that Donald Trump has really had issue with the crowd sizes that this ticket has been able to draw in the month since this campaign launched. He even at one point suggested that the crowds were AI generated. So they will be doing that, trying to raise attention to their ticket in a swing state. Donald Trump himself, of course, will be in the swing state of Michigan today. But meantime, the proceedings will continue here in Chicago. It is not just former President Barack Obama who we will hear from tonight, but the former First Lady Michelle Obama, who polls show is one of the most popular Democrats in the country. We'll also be hearing tonight from the second gentleman, Kamala Harris's husband, Doug Emhoff. So certainly a lot of speeches planned for tonight. We'll all be watching to see if the program runs a little bit more on schedule, remembering that last night when President Biden gave his speech, which was in part a legacy address, in part campaigning for Kamala Harris, it was well past midnight on the East Coast by the time he wrapped up.
Yeah, Political leads with that today with someone who's used to these conventions saying, do they realize the universe runs on East Coast time? Kaylee, so I'm sure you didn't get a lot of sleep last night. But one moment in that speech I think was very significant when President Biden came out and said, you know, they have a point. Talking about the thousands of protesters that are in Chicago, some even getting into the DNC perimeter. What is the feeling on the ground between how unified this Democratic Party is when it comes to the situation that there's a big gap from progressives and centrists when it comes to Gaza?
Well, what the high-profile Democrats gathered here would tell you, Anne-Marie, is that the party itself is very divided. That doesn't mean the Democratic electorate itself is or very together, rather, and the electorate itself may be a bit more divided. You are absolutely right. We did see protests here in Chicago yesterday. At one point, a number of protesters broke through a security barrier and had to be apprehended by police. They didn't actually make it into that first initial actual barrier around the United Center, but certainly you are seeing that activity. There were thousands of protesters. More protests are scheduled for today and later on this week as well. There had been conversation yesterday when the news broke from the Secretary of State Antony Blinken that Israel had agreed to a ceasefire bridge proposal put forward by the U.S., calling on Hamas to do the same, that may be very opportune political timing to coincide with this convention. We heard that President Biden talk about that progress being made last night, and Congresswoman Alexandria Ocasio-Cortez, of course, one of the progressives, got some of the biggest applause of the night when she talked about how Harris will continue that push forward toward a ceasefire. Harris, of course, is seen as someone who is more sympathetic to the Palestinian cause, perhaps a bit more willing to stand up to Israel and Netanyahu. So it'll be interesting to see how that narrative carries forward throughout the coming days.
Katie, thank you. Looking forward to the coverage throughout today. Katie Lyons there of Bloomberg. Over at the DNC in Chicago, more coverage from them. Balance of Power a little bit later on this afternoon, and again at 5 p.m. Eastern Time on Bloomberg TV. Coming up tomorrow, Andrew Sheets of Morgan Stanley, Torsten Slock of Apollo, Sarah Hunt of Alpine Saxon Woods, and Libby Cantrell of PIMCO, and maybe even Anne-Marie in Chicago. We'll see if we can make that happen a little bit later at a New York airport. From New York, this is Bloomberg.